Commissioner, I call Mr. Clive van Horen.
He'll unravel the mystery of the card. Yes. Now, Mr. Van Horen, would you prefer to take an oath or make a motion?
The oath, thanks.
Yes, swear the witness, please.
I swear by Almighty God
I swear by Almighty God
that the evidence I shall give
that the evidence I shall give
will be the truth,
will be the truth,
the whole truth,
the whole truth,
and nothing but the truth.
and nothing but the truth.
Yes, do sit down, Mr. Van Horen.
So-
Yes, is all. Oh, sorry, Mr. Sherry.
Mr. Van Horen, your full name
Clive Richard Van Horen,
and what is your business address, sir?
One-
Sir?
1 Harbour Street, Sydney.
And you have received a summons from the Commission to
I have.
appear today?
Yes,
Do you have that with you?
I do.
I tender that summons, Commissioner.
Exhibit 1.94, summons Clive Richard Van Horen.
And Mr. Van Horen, you've made a number of statements for the Commission, but in relation to this topic, you've made 3 statements, haven't you?
That's right.
One dated the 9th of March, one dated the 5th of March, and a third one in relation to Ms Savides dated the 9th of March.
Correct.
And I understand you wish to make a correction to one of your statements.
Yes, please, if possible. So this is for the primary witness statement on the CCI matter, which was the one dated the 9th of March. And if we go to paragraph 57, which includes a table describing the remediation approach, in the third dot point, I would like to amend that to where it says plus interest was the last line, plus interest was paid on the total refund amount, to delete the word total, and to add if the card balance had been paid off to the end of that sentence.
Yes, will you make the amendment that you think necessary and initial that amendment? Would you please, Mr. Van Horen?
Sure.
Mr. Van Horen, there's a similar
Just
amendment.
let him make
Sorry.
the amendment, because I'll then get him to read it out so that there's no doubt of what the amendment is, and we're all working off the same script.
Yeah, and just to be clear, it applies to both columns of that table.
So make the amendment, and then I'll get you to identify it with some particularity. Now, can you tell us what you've changed? It's in par 57 and the table, is it?
Yes, in the table. So the second row, which is called refund calculation,
Yes.
and the third dot point, the revised statement says refund amounts included interest charged on premiums debited to customers' credit cards, comma, plus interest paid on the refund amount if the card balance had been paid off. And the same is repeated in both columns.
Yes, I see.
Did you
Thank you very
delete the
much.
word was, Mr. Van Horen? I don't think you said it.
I didn't delete the word was.
You did not delete the word
No.
was. Thank you. Now, with that correction, is that statement true and correct?
It is?
Now, the other 2 statements to which I've taken you true and correct as well?
Yes.
We tender those, Commissioner.
Should we deal with them perhaps separately and designate each with a separate exhibit marking?
Yes, sir.
Mr. Sherry, which then would you treat as the one
One-
reading
one that's
CBA
on-
9006 0001 0001 will be exhibit 195. 1.96 will then become which one, Mr. Sherry?
Perhaps the one in relation to Ms Savides, which is also dated the 9th of March, Commissioner?
Have we got a doc ID for it?
Yes. CBA 9005 0001 0001.
Yes, thank you. That'll be exhibit 1.96.
And then the third one is headed supplementary statement. And I'm not sure that has an ID on it. Oh, it's on the screen, Commissioner. So it's...
WIT 0001 0008 0001.
Thank you, Commissioner.
Yes. Thank you, Sherry? Yes, Ms Orr.
Mr Van Horen, you're the Executive Retail Products within the Retail Banking Services Business Unit of CBA.
Yes, I am.
And you've been put forward by CBA to give evidence about 2 add-on insurance products offered by CBA, Credit Card Plus Insurance and Loan Protection Product Insurance, which is available for home and personal loans.
That's right.
Now, 3 statements have been tendered by Mr Sherry. In fact, you signed 5 statements relating to this topic, but you replaced 2 of them with later versions of the same statement. Do you recall that?
I had draft statements, which were then finalised. I had other statements that I prepared and signed on other topics, personal overdrafts being the primary one.
Yes. Now, I'm not talking about those ones at the moment. I just want to be clear about this in case an issue arises with the sequencing. 3 statements have been tendered, 1 on the 5th of March and 2 dated the 9th of March. Both of those 9th of March statements are later versions of another statement that you provided and signed in final form on the 2nd of March 2018. Now, do you recall this?
Yeah, I recall changes having been made to those
Yes.
statements. Yeah.
And the changes were minor in
Yes,
those statements.
correct.
So the Commission received statements on the 2nd of March, which are substantially the same as the statements that are in evidence dated the
Yes.
9th of March.
Yes.
Is that right?
Yes.
Thank you. Now, the first insurance product your main statement deals with, which is, and when I say the main statement, I'm referring to the statement that is dated the 9th of March 2018, which deals not with Ms Savidis' evidence, but more broadly with CBA's sales and processes in relation to these products. So will you understand that
Yes, the main statement, yeah.
That's the statement
I'll
I'm
know which one that
referring
is.
to unless I indicate otherwise. So the first insurance product that your statement deals with is Credit Card Plus Insurance, which you refer to in your statement as CCP Insurance.
That's right.
And CCP Insurance is issued by an entity branded as CommInsure.
Correct.
And the entity branded as CommInsure is Colonial Mutual Life Insurance Society Limited.
That's right. I think Life Assurance Society Limited.
I'm sorry, Life
Assurance.
Assurance, not
I'm
insurance.
sorry.
Yeah.
Thank you. And CCP is insurance for CBA branded credit cards that's issued by CBA, as opposed to insurance for Bankwest credit cards, which are also issued by CBA.
Correct.
And how long has CBA sold CCP insurance?
I believe it goes back to around 2003, certainly a number of years.
And CCP insurance provides two different types of insurance cover, is that right?
Yeah, CCP is what we'd call a bundled insurance product. I mean, it's one policy, but it has multiple benefits. There's in fact probably more like 5 benefits, but they fall into 2 categories.
Yes.
The one category is one that would pay off the credit card balance in full if, for example, the customer dies or is permanently disabled. The second category would apply where temporary disability, unemployment, or similar circumstances arise, and that would pay off the monthly instalments for approximately 5 months.
Thank you. And during the period from 2011 to 2015, customers were offered CCP insurance as part of their application for a CBA branded credit card.
That's right.
And that's still the case, that the offer of CCP insurance happens at that time?
Yes, the complication is, as you referenced, we've made the decision to stop offering
Yes.
CCP.
Well-
So that process is busy being executed.
Yes, we'll come to that.
Yeah.
But presently it still remains the case that the offer of insurance is made at the time that the consumer is applying for the credit card.
That's correct. There is another set of circumstances where customers approach us after having acquired a credit card later on, and it could be at any time, where they can also and do also open the insurance policy.
So this assumes they've declined the initial offer to take out the insurance made at the time that they acquired the credit card.
Correct.
Yes. And the offer that's made in connection with the acquisition of the credit card can be made either in the branch if the customer comes in and applies for the credit card in the branch, or on the phone if the customer applies for the credit card that way, or on an internet platform if the customer applies for the credit card online.
That's right.
Now, during the period from 2011 to 2015, you tell us in your statement that 29.54% of CBA's credit cards had an associated Credit Card Plus policy.
That is the number quoted in my statement. I should clarify that slightly because the numerator and denominator may not relate to each other. So the way we answered that question was the total number of credit cards sold during the period and the total number of CCP policies doesn't follow that they all were sold at the time of acquiring the credit card because some could have been taken up a bit later.
Yes, so I'm sorry, my question was not directed to whether they were sold at the time.
Yes.
My question was directed to, in total, in that period, 9.5% of the credit cards had a Credit Card Plus insurance policy attached to them.
Yeah,
So nearly a third.
that's broadly correct, yes.
And we know that most people get the Credit Card Plus insurance policy at the time that they apply for
Correct.
their credit card.
Correct.
Thank you. Now, CBA staff have sales targets for selling CCP insurance,
Yes,
and you say in your statement that prior to 2014, these sales targets were part of a quarterly recognition program for CBA frontline staff that allowed them to receive $1 payment for performance above sales targets.
yes, I can explain the broader remuneration structure if helpful, but yes, there were direct campaign-related incentives in place for a period up till 2014. They were not specific to CCP. They applied to a full spread of different products.
I'll take you to some documents about that, but not only could they get $1 payment, CBA staff, for performance above sales targets, but they could win prizes for selling the most insurance.
Yes, there have been campaigns long since scrapped, but there were campaigns during that period.
Well, they were in place relatively recently, weren't they, Mr Van Horen?
To my knowledge, the individual-based sales campaigns were scrapped in 2014. Thereafter, they moved to team-based or branch-based campaigns.
Well, can I show you two documents that are annexed to your witness statement as part of your exhibit CVH 12? The first is within that very large annexure. It's at CBA 0507 0014 0010.
Yes.
So this is an example of a promotion that CBA ran in 2012 that gave prizes such as iPads, iPhones and JB Hi-Fi vouchers for selling the most insurance in a particular period.
Correct.
And we see from just below halfway down the page, we see that Credit Card Plus insurance was one of the forms of insurance captured by this promotion, where we see CC and the plus sign.
Yes. Yes, correct.
Yes. And within that same exhibit to your witness statement, can I take you to another more recent document, which is CBA 0507 0014 0017?
Yes.
This is another example of a promotion that CBA ran, this time in 2014.
It is.
The Don't Forget Your Toothbrush incentive, 2014.
That's right.
And this was an incentive program that gave rewards, this time in the form of a payment to the Team Social Fund for high selling of insurance products.
That's right.
And again, it included CCP insurance.
That's right.
And you say in your statement that in 2014 the quarterly recognition program shifted towards a team-based approach, and you've referred to that this morning. So the sales targets are now at branch level rather than for the individual. Is that right?
Yes, simplistically, yes.
and incentive payments are determined according to a range of factors now,
That's right.
and those factors still include volume of sales of these insurance products.
They do, a very tiny percentage of the total.
Well, what percentage, Mr Van Horen?
Well, if I could just explain how the incentives work in
Yes.
a nutshell. So, three core components. The first is the basic salary, which is fixed. It is not sales performance. So that is obviously the very largest portion of a frontline staff member's remuneration.
Yes.
The second component is a short-term variable component, which is approximately 10% of the base REM. And that variable component is a function of a balanced scorecard approach, which would have multiple categories of performance outcomes in it. They would include business performance, and within business performance would be sales. Sales not just of credit cards or credit card plus, but all products. There would be customer satisfaction, other measures like self-service, education, training, productivity, and so on. So, and then a third category which did apply up to 2014 was those somewhat unusual short-term sales campaigns that you've referenced already. The point I'd make about all of that is if you look at the direct component of remuneration attributable to the sales of credit cards or credit card insurance, it would be of the order of 1.5%, because all the others include home loans and deposits and savings accounts and all the other things that a customer might need. 1.5% of the variable part, 1.5% of the business performance measures, which are roughly half of the total, which relate to the 10% of the variable REM. So if you do the maths and you multiply that all out, there's a very tiny fraction of 1% of a person's remuneration, which would be determined by the sales performance on one category.
Because your people didn't need to be incentivised to sell Credit Card Plus in connection with a credit card, because your processes required them to attempt to sell Credit Card Plus insurance with the credit card.
That's right.
Yes. Now, could I ask you to look at a document which is not part of your statement, CBA 0001 0049 1198. Have you seen this document before, Mr Van Horen?
Yes, I have.
And it's a document that sets KPIs and sales targets for CBA staff for FY 2015 and 16.
For the direct banking business, which is the call centre part of our business.
I see. So this applies to call centre staff,
Yes,
and it includes KPIs and sales targets in relation to the sale of credit cards and CCP insurance.
yes.
And if you could turn to 1235. I want to make sure I understand this document correctly. This page has cards sales targets for FY16, and we see towards the bottom in the column on the far left side, Credit Card Plus net premium, and a forecast for FY16 of 38.05. Do I understand correctly from this document that the average full-time employee, we see a reference to average per FTE per week up the top, the average full-time employee was forecast to sell 38.05 CCP policies per week?
No, that's not my understanding. So I've seen this document, have investigated. I didn't ever manage that part of the group. But the context I can give, this is for the card sales team, as it says at the top. So it's not the entire contact centre. It's the desk, the group of people who are there to handle customers' queries on cards.
Yes.
And what that specific measure refers to is Credit Card Plus net premium. So my understanding is that would refer to dollars, not numbers of units, not numbers of policies or products sold, dollar value of net premium sold by every person on average per week. So
should we read 38.05 as a dollar figure?
correct.
So per week, the people that you've just described were to sell $38.05 worth of Credit Card Plus net premiums.
Correct. That's my understanding of it.
Okay. And there's a document that is 2 page 2 pages later in here, which relates to branch sales targets. That's 1237. So how does this branch sales page work? Who
I can
was that
see why that's
directed
perhaps
to?
a little confusing, but it says our branch. Our branch is the name we use inside CBA for the team of people in the contact centre that support our own employees. So think of it as a virtual branch for CBA staff members.
I see.
So it's not to do with branch KPIs or generic branch performance targets.
So this refers to the same group of people?
In terms of customers or?
No, the same group of CBA
No,
employees.
so if you think of the entire contact centre, call it 2,000 people, those people are assembled into multiple different teams who have different areas of specialisation. One of them would be our branch, in other words, people whose focus it is to support employees of the Commonwealth Bank. So if I'm a new staff member and I need to make an inquiry about a credit card or about anything else, my call would go through to that team member.
Yes, I see. And we see the forecast figures for and the sales targets for these people in relation to credit card plus net premium on this page.
Yeah, it's very similar.
Yes, thank you. I tender that document, Commissioner.
Exhibit 1.98 CBA 00010049 1198 KPI Direct Banking financial year 16.
Mr Van Horen, there have always been certain eligibility criteria that have to be met for an individual to be able to purchase CCP insurance. Is that right?
That's right.
They have always been that they need to be aged between 18 and 64 years old and to be an Australian resident. Is that right?
That's right.
And they also have to be a primary account holder for a CBA branded credit card.
Yes.
And CBA has processes in place to stop anyone who doesn't meet any one or more of those 3 criteria from purchasing CCP insurance.
That's right.
There were also employment eligibility criteria if the holder of CCP insurance wished to claim disability or unemployment benefits.
Correct.
And these changed a little over time, but essentially a person with CCP insurance could not and still cannot receive cover in respect of the monthly credit card repayments if they've suffered disability or involuntary employment as opposed to death or terminal illness, unless they were employed immediately prior. Is that right?
That's correct.
And
You said employed, I think you mean involuntarily unemployed, just for the record if it matters.
you're quite right. I apologise, Mr Van Horen. Involuntary unemployment. And in addition, from the 28th of November 2015, a person with CCP insurance could not and still cannot receive cover in respect of their credit card balance in case of permanent disability unless they were employed immediately prior to making the claim.
No. So if I heard your question correctly, you asked about the payment of benefits if the person dies or is permanently disabled. That is not contingent on their
Permanent
employment
disability
status.
only.
That's not contingent on the employment status, to the best of my knowledge.
There wasn't a change that you've referred to in your statement on the 28th of November 2015 that meant from that time onwards permanent disability cover for the credit card balance was also contingent on being employed immediately prior to making the
Point
claim?
me to the paragraph, please.
Yes, that's paragraph 27A. There's a lengthy table that you include in 27A, Mr Van Horen.
Yep. I'm aware there were a number of changes made to criteria for the various benefits over time.
And that's
If-
why you've got a number of different parts to this
PDSs,
table. And the
yes.
28th of November is dealt with in the 3rd row
Yep.
of that table. And that directs us to a product disclosure statement, which is Exhibit CVH4 to your statement.
Yep.
And what I want to put to you is that the effect of that product disclosure statement is that from that date, when those changes were made, cover for the credit card balance in the case of permanent disability was also contingent on being employed immediately prior to the claim.
To be honest, I'd have to read the detailed PDS, so I won't disagree with that if that's your interpretation.
Oh,
it's
the
not a
P-
change I was involved in at the time.
No,
And
it's the PDS that is CBH 4
Yep.
to your witness statement, and if you'd like to read that over lunch, and
Yep, I can do that.
if you disagree with that proposition, you could let us know after lunch. So for many years, CBA sold CCP insurance to people who didn't meet the employment eligibility criterion. Is that right?
There were many customers who did not meet the criteria to whom we sold it. I think it's not a statement I would make definitively, because in the absence of information, some customers may have been eligible, but we weren't able to confirm that.
Well, it's the case, isn't it, that you sold this insurance policy to unemployed people?
Yes,
You sold this policy to pensioners?
that's right.
You sold this policy to students?
That's right.
And unless their circumstances changed so that they became employed prior to making a claim, they were not eligible for the benefits that required them to be employed.
That's correct. And it is the case that some customers did claim subsequent to taking out the policy when they did become employed. But your statement is right, and I'm not going to quibble about the broad thrust of your statement.
Well, you can't, can you, Mr.
No.
Van Horen?
No.
Because it is the fact that CBA sold large numbers of these policies to people who were ineligible to claim certain
That's
benefits
right.
under them.
Yeah.
And CBA didn't draw to their attention at the time it sold them the CCP insurance policy that their ability to claim benefits under the policy would be restricted if they were not employed prior to making a claim.
We certainly failed to take what I would consider today to be reasonable steps. There was some disclosure, but I don't believe that disclosure was adequate.
What was the disclosure, Mr. Van Horen?
Well, if you look at the sales scripts, whichever channel we're talking about, both branch and telephone-based and digital, there were disclosures in those sales processes and scripts, whether it was online or in the assisted channel, which did refer to minimum employment standards, and it referred customers to PDSs, the product disclosure statement.
I just want to be clear, you say that the scripts referred to minimum employment.
Some scripts did have reference to the PDSs. The PDSs
I
all...
see. That's a different thing, isn't it, Mr. Van Horen? They had a reference to the PDS.
I think it depends on which time period we're talking about. So if you go back to 2011, the reliance was very much on the disclosures in the PDSs. Customers would receive a letter called a welcome pack, which would have the same kind of information again. So that was what applied in the period from 2011 onwards. Progressively through the years, in particular from 2015, much stronger disclosures were put into the sales scripts in the various channels.
Yes, so your statement in relation to CCP insurance deals primarily with 2011 to 2015. That is the period in which CBA was selling this product to people who were ineligible to claim for benefits under the policy.
That is the period, yes.
And in that period, whether a person purchased the product by phone or in a branch or online, they were told nothing by CBA about the requirement that they be employed to be eligible to make those claims.
I don't think it's quite right to say they were told nothing, because it was clearly disclosed in the PDSs.
It was clearly disclosed in the PDSs. The PDSs are multi-page documents.
Understand.
Yes. So there was nothing over and above the text in the product disclosure statement to draw that eligibility criterion to the attention of the customer when they
That's
purchased the
correct.
policy. Now, that was the case in circumstances where the vast majority of claims made under these policies were made in respect of the disability and unemployment benefits categories. Do you agree?
Yes.
Thank you. And in April 2015, CBA worked out that some customers who'd purchased these products may not have met the employment eligibility criteria. Is that correct?
That's right, through an internal audit.
Yes. Now, can I take you to that internal audit document, Mr Van Horen, which is Exhibit CBH 7 to your statement. CBA 0001 0027 0002. Now, this is the audit report you're referring to, dated the 9th of April 2015.
That's right.
And do we see on the right-hand side, under the heading Credit Card Plus Insurance, that the audit group have identified that approximately 64,000 customers who were unemployed at the time of a credit card application were sold CCP insurance. Sales staff are not required to disclose to the customer that involuntary unemployment or temporary or permanent disablement benefits cannot be claimed if their situation remains unchanged. So that was the finding of the audit group in this report. And then do we see the audit group goes on to say, in the light of recommendations from ASIC's Financial Services Inquiry of November 2014 and recent global risk events such as the UK loan protection insurance issue, these sales practices may not have resulted in a fair outcome for the customer. CommInsure management will analyse data, understand customer impacts and implement changes to CCP product design and sales processes as required. So as at 9 April 2015, CBA's estimate was that 64,000 customers had been sold CCP insurance in circumstances where they were unemployed and therefore unable to claim benefits that were contingent on employment.
Yes, I just qualify that slightly. The vast majority were students, and we can come to the numbers later, but of the 64,000, the vast majority of students, and we would say were ineligible. There was a subset, give or take 17,000, who were potentially ineligible, based on the data that we had.
And we see the audit group talking about the fact that sales staff aren't required to disclose that these benefits can't be claimed unless they become employed. This is 2015, so it's nearly 4 years after ASIC released its report number 256 into consumer credit insurance. Are you familiar with that report, Mr Van Horen? And was CBA one of the ADIs whose practices in relation to consumer credit insurance were reviewed by ASIC as part of that report? Yep. And CBA would have known at this time, in April 2015, of the 10 recommendations that ASIC made in that report.
That's right.
And would have known about those recommendations for almost 4 years. One of those recommendations related to sales scripts used in sales of consumer credit insurance over the phone or in branches. Is that right?
That's right.
Can I show you that recommendation in RCD 0021 0001 0003? If we could turn to 0012. Do we see there that the first recommendation that ASIC made was that when CCI is sold over the telephone, CCI being consumer credit insurance, which the CCP product was.
Correct.
When CCI is sold over the telephone, distributors should have formal sales scripts in place for their sales staff. Scripts should include, and if we go down to G, a clear explanation of the main exclusions that apply to the CCI policy. And where CCI is sold as a packaged product, this should include a clear explanation of the main exclusions that apply to each component of the policy. That's right, that was the recommendation.
Yep, absolutely.
But in 2015, CBA's sales scripts didn't include any explanation of the main exclusions that applied to disability or unemployment benefits under the CCP policy, such as the employment eligibility exclusion.
Yeah, I've certainly gone back and looked at what was done in response to this report in 2011, and quite comprehensive programs of work were executed to implement the recommendations. In respect of the specific one around the exclusions, the main exclusion that was built into processes was around pre-existing conditions, or PECs as they're sometimes called. But the exclusions around employment eligibility criteria were not.
Why not, Mr Van Horen?
As I said, I think the main reason is because too much reliance was placed at the time on those disclosures in the PDS. So a flawed assumption and a flawed judgment, but essentially the reliance was placed on that disclosure to customers.
A flawed judgment in light of ASIC's specific work on this topic and direction to ADIs, including CBA, to modify its sales scripts to refer to those exclusions.
I would agree with that, yeah.
Yes. Commissioner, could I tender that ASIC report?
Exhibit 1.99, ASIC report numbered 256, RCD 0021 0001 0003.
And could I take you back to the audit report, Mr
Sure.
Van Horen, which was CBA 0001 0027 0002? And could I ask that you turn to Appendix A? Which is 0005. We see that this is an appendix of summarising the very high to medium audit issues that were identified by the audit group. And the first issue is the CCP issue.
Correct.
Which is given a high rating by the
Yes.
audit group. And a high rating is given to the fact that management haven't implemented sufficient controls to confirm that staff are following the defined sales process. What was the defined sales process?
I would have to believe that the defined sales process would have been one based on what was documented at the time in the various assisted channels, branch and call centre, and the way the finding is phrased is say we did not have enough controls to make sure that people are in fact following the right process.
But what was the right process? What had CBA defined as the sales process at this time?
Yeah, you know, I would personally perhaps take issue with the way that's worded. The substance of what the issue is calling out is that our sales processes were not delivering the right outcome. And you know, I'm not sure I would agree with the way it's worded in saying that people had a process defined as X and were deviating from a process to do Y, because the process X was by and large the process and that people would have to follow that process.
It was the process that was deficient, wasn't it, Mr Van Horen?
Yes.
Not that people were departing from the process.
I would agree with that, yeah.
Yes, thank you. And management haven't implemented sufficient system controls, we're told here. If we go back to the first page of this document at 0002, we see that the third paragraph on the right relates to the high-rated issues. The high-rated issues don't fall within the direct accountabilities of credit cards management, as they relate to either other products or sales practices in the front line. As a result, we rated management awareness and action as satisfactory. Do you see that?
I do.
So 64,000 customers had been sold credit card plus insurance in circumstances where they were ineligible for much of the coverage, but the credit card's management awareness and action was satisfactory.
Yes, I can try and explain this. If you look at the very top of that report, it talks about the business unit being the credit card business unit and
Yes.
the accountable executive. That is a person who is the head of the credit card team. And it is referenced in various places in this document, but it talks about the way the audit was done was to look at the end-to-end credit card process, even including components of that process that were managed or delivered or owned by other parts of the group. So it's attempting to give a holistic view, and where it refers here to management awareness, I believe they would have been referring to the awareness of the credit card team.
So does that mean there's some other group somewhere in CBA that was held accountable for this and who got an unsatisfactory rating for their management awareness and actions?
Yeah, so I think the complexity here is there's the retail bank and there's CommBank's. There are two
Yes.
different parts of the group. Obviously,
Yes.
for customers, they don't care about that, rightly so. But different accountabilities rest with different parts of those teams.
So is there a team somewhere within CBA who received an unsatisfactory rating and was held accountable for these issues?
I would have to check whether there's a document referencing that exact conclusion, but there certainly would have been significant documents referencing in the CommonsSure side this known issue, and that was reported in board reports and the likes, which have been part of our documents submitted.
I see. So this issue with Credit Card Plus insurance was first reported to the Colonial Mutual Board Audit Committee on the 5th of May 2015. Is that right?
Yeah, that probably would be right.
That's paragraph 38
Yep.
in your statement,
Yep.
Mr Van Horen. So this document is the 9th of April,
Yes.
and then it's the 5th of May when there's a report to the Colonial Mutual Board
Yep.
Audit Committee.
Yep.
And you've exhibited as part of Exhibit 8 a paper that went to the board on the 5th of May 2015, which is CBA 0503 0007 0009.
Yes.
Seems that document has two different document IDs on it, but we have it now. Yes, thank you. And we see there from clause 4.1.3 that that board audit committee was told about the 64,000 customers who were unemployed at the date of their credit card application and were sold a CCP product. And we see below that in 4.1.4 a paragraph that reflects what we saw in the other audit report, which is that there's no requirement for frontline staff to make unemployed customers aware that they may be ineligible to claim.
That's right.
So this is a paper that went to the Colonial Mutual Board Audit Committee in May 2015. When was the matter reported to the CBA Audit Committee? Is there an equivalent document for them?
I'll have to check on the exact timing. Looking at my statement, on paragraph 38, it refers to reports to the Board Audit Committee, which refers to the CBA Board, the Board Risk Committee, which would refer to the CBA Board. And in the attachment, there are dozens of pages of extracts
Yes, there
to
are,
various
Mr. Van
boards.
Horen.
Yep.
We do have a document dated 9 June 2015 in those many documents that form part of this exhibit, which is heavily redacted. And if we can find that, I'll ask you if that is the report to the CBA Audit Committee. It's CBA... I'm sorry, it's very difficult to read because the two doc IDs have printed over each other. CBA 503 0007 0005. Could we bring up the first and second pages of that document? I think we have there the first and third pages of the document.
That doesn't seem to be the right page.
We're looking for 001 0005 and the page that follows it. I see. So there's a page in between the two that has been redacted and not produced in the court book. Is that your understanding? Are we missing a page in between there?
It's possible. I can be confident in saying that all of these documents were reported to all of the CBA governance forums regularly.
So we can't tell from this document whether it was part of what went to the CBA Audit Committee on the 9th of June 2015?
Well, not from what's on the screen because it's clearly missing a page in the middle. It goes from 4.11 to 4.125. So Can only assume it's in that middle page. We can find that page.
I see.
Supply it.
CBA first made an informal notification to ASIC about this matter on the 7th of May 2015.
That's right.
That was an oral notification.
I know there were multiple notifications, including letters and conversations.
Well, the first written communication with ASIC, according to your statement, is on the 15th of May 2015, and you've exhibited as Exhibit 9 to your statement the letter that went
That's
to
right.
ASIC, which is CBA 0001 0024 0118.
That's it.
If we could have the first and second pages of that document on the screen, that will give us the entirety of the letter. So, the first question for you, Mr. Van Horen, is about the status of this communication. It's not a report under Section 912, a significant breach, is it?
No, it's called what's called a good governance notification, which my understanding is doesn't have any, there's no such legal framing really. It was a practice that CBA used at the time. We've since stopped doing that. The reason why it was called a good governance notification at the time was because it wasn't clear at that stage exactly how material the breach was because of the bundled nature of the product that I referred to earlier. It doesn't take away from what we believe it is now, which is a breach.
But you've identified at this point 64,000 potentially affected
Correct.
customers.
Correct.
That didn't render it a significant breach for the purposes of ASIC notification.
It didn't at the time.
Should it have, Mr. Van Horen?
I believe it should have.
Thank you. But instead, this letter goes to ASIC as a good governance notification. And CBA tells ASIC in this letter that it has recently identified that some Credit Card Plus insurance customers may not be able to claim on unemployment and disability benefits. Do you see that reference there?
I'm familiar with the letter. I didn't see it in which paragraph you're referring to.
Paragraph 1, Mr. Van Horen.
Yes, I've got it.
And the letter notes, it goes on to note in the third paragraph, our preliminary view indicates that of approximately 245,000 current CCP policyholders, an estimated 27,800 may not derive income from employment at the time their policy was issued. Now, that figure, 27,800, is substantially lower than the estimate of 64,000 customers that ASIC had communicated, that CBA had communicated internally.
Yes.
Why was ASIC only told about 27,800 of those 64,000 customers?
I'm not sure what the calculation was behind the 27,000, but what I do know from having been through multiple versions and iterations and chapters of this investigation is that the analysis of the number of customers impacted is quite complex, which is why the numbers have moved around a lot. And you'll see that through much of the correspondence with ASIC and the meetings we've had with them, the numbers have moved, and that applies to the LPP matter as well, which I'm sure you'll get to.
Yes, I will. Accepting that the numbers move as you find more out about the circumstances of the individual customers, why did CBA make the decision to not tell ASIC about the potential larger number of customers?
Couldn't give you a reason why that number changed.
Well, so CBA firstly chooses not to make this a significant breach notification under Section 912D, and then secondly chooses to notify ASIC of only 27,800 potentially affected customers. I'm going to suggest to you that CBA was doing all it could to minimise in its communications with ASIC.
I'm afraid I couldn't agree with that. It's not in our interests to try and mislead the regulator in any way, and that's certainly never been the intent from anything I've ever seen or been involved in.
Well, do you think this was misleading, Horan?
Well, it's quite clearly referenced as our preliminary review, so I can only believe that between the April audit and the May letter, work was underway to try and understand the number of customers that were impacted.
Whatever work was underway, it had not reduced the potential number of affected customers down to 27,800, had it?
I don't have any basis to agree with that statement.
Do you have any basis to disagree with that statement, Mr Van Horen?
Other than the circumstantial evidence of what the letter here says.
Mr Van Horen, is it open to me to conclude that internally CBA was telling its board or board committee one thing and telling ASIC something radically different?
I think that would be
So
certainly
radically different because it's half.
I think there's no questioning what the letters say and what the reports say. We could go and try and retrace how the calculation was determined to put this number in this letter. But was there ever any intent to tell a different story to regulators or our internal governance structures? Nothing I've seen suggests that's the case.
Well, what I'm going to suggest to you, Mr Van Horen, is that there was a decision made internally at CBA to give ASIC a figure that was limited to current policyholders. Our preliminary review indicates that of approximately 245,000 current CCP policyholders, an estimated 27,800 may not derive income from employment.
Yeah, that's correct. There were yes, there were many categories of customers, and this is documented in all the correspondence with ASIC, which were added as the scope of the investigation continued. And one of those big changes was going from only looking at initially current policyholders and then added closed policyholders. And there were others as well.
Yes. And by choosing to notify ASIC only of the current policyholders, the problem was minimised, was it not?
The problem was incorrectly stated.
Thank you. And if I could just quickly take you to a connected document before we finish for lunch, Commissioner. Could I ask that you look at a document which is in your Exhibit 12, which is CBA 0001 0024 0224. Now, this is a letter from much later in the piece, which I'll come back to. You can see that it's a letter dated the 21st of February 2017. It's a letter from CBA to ASIC again. But what I'd like to direct your attention to now is a section on the second page of that letter, 0225. Just on the topic of this being a good governance notification, Mr Van Horen, could I direct your attention to the paragraph, while we have demonstrated? While we have demonstrated a willingness to engage with potentially impacted customers, this is at February 2017, we consider that CBA and CMLA have not breached any legal obligations in this matter. We notified ASIC of this matter because we thought it may be of interest to ASIC and not pursuant to our reporting obligation under Section 912D of the Corporations Act. Yes, agreed to take the above steps as requested by ASIC. Is that an accurate statement, Mr Van Horen, that CBA notified ASIC of this, it thought it may be of interest to ASIC?
I wouldn't choose those words. I don't think it's an appropriate framing of the issue.
Well, those are CBA used in its correspondence with ASIC.
That's correct. And as I said, the rationale for that at the time was this fact that the bundled nature of the policy, where customers were eligible for a number of the other benefits, was what clouded the issue.
Do you still consider, and does CBA still consider, that CBA and CMLA have not breached any legal obligations in this matter?
I think on balance, and taking into account all the all the considerations, I do think that it was a breach.
Of which obligations, Mr Van Horen?
Of our obligations to act honestly, efficiently and fairly.
Thank you, Mr Van Horen. That's a convenient point, Commissioner.
Yes. We'll resume at 2 p.m. Yes, Ms. Orr.
Mr Van Horen, before lunch I showed you parts of a document which had some redactions within it, which was the paper that went to the CBA Audit Committee on 9 June 2015. You'll recall that we had 2 pages but seemed to be missing at least 1 page in between. Could I ask that CBA 0503 0007 0018 be brought up? Now, it appears that there are multiple pages in between the page that you see on the left-hand side and the page that you see on the right side, which appear to have been redacted in their entirety, but there is a reference here at 4.1.20 to these matters. Do you see that, Mr Van Horen?
Yes.
Which indicates to you that there was some notification to the CBA Audit Committee on the 9th of June 2015 of this issue in the terms that appear under clause 4.1.20.
Yes.
Yes, thank you. Now, returning to the chronology of events, Mr Van Horen, we had been speaking of the notification to ASIC that occurred on the 15th of May 2015, following the audit report that identified this issue on the 9th of April 2015. Yes. Now, by the end of May 2015, CBA had updated its sales script for the assisted channels for the selling of the Credit Card Plus insurance product. Is that right?
That's right.
And could I take you to your first exhibit at CBA 0507 0013 0067? Now, if I could ask you to focus on the page on the left. This is a document annexed to your statement. Is this the amended script for use in the assisted sales channels, so by phone or in branches, for the sale of the Credit Card Plus insurance product after May 2015?
That's right.
And we can see the way the script works after that time. If we look at the top of the page, at some point in the script, the CBA person is to say these words to the customer: I would now like to tell you about an optional insurance from CommInsure called Credit Card Plus, which could help pay your credit card repayments if you're unable to work, or balance if you pass away. You don't have to take out this insurance, but it may help if something happens to you. It is issued by a life insurance company in the Commonwealth Bank Group. It's quick and easy to set up now. Can I explain how it works? If no, the instructions to the person are: you can attempt to overcome the customer's objections up to 2 times during the entire application. If the customer still objects, so a third objection, end the application here, continue with the credit card application if needed. So those were the instructions given to CBA staff.
They were.
Now, if the person discussing this with the customer received a yes answer to "can I explain how it works?" or overcame up to 2 objections to get a yes answer, the person from CBA was then directed to say to them, do you typically work more than 20 hours a week in employment that is not seasonal in nature? And then the instructions to the person are, if no, end the application here. Customers who work less than 20 hours a week are not eligible to claim for benefits on Credit Card Plus. So that was the amended script as a result of the changes made in May 2015 for branch and on the phone sales of this product.
Yes.
Okay. Now, the "do you typically work more than 20 hours a week" question is what CBA seems to refer to in its documents as a knockout question, designed to knock out the possibility of selling the customer this insurance product if they don't meet the employment eligibility criterion. Is that right?
Yeah, that's right. So knockout means if the answer is no, then that customer is excluded from further sales for that product.
Okay. Now, at the same time that these changes were being made to the scripts for the sales in a branch and sales on the phone, there were also changes being made to the digital channel. So if a consumer wanted to purchase this product online.
That's right.
And if we move to, also within that same exhibit in your witness statement, to CBA 0507 0013 0069, we see the changes made, not to the script, because of course there's no script when a person's sitting in front of a computer doing this online, but changes to the text that appears on the screen as they're moving through the process. Is that right?
That's right.
And the change that was made, we see in the fourth paragraph down, the third sentence there. So, can you see Mr. Horen on the fourth line down? If you are working less than 20 hours a week, or if your employment is seasonal in nature, then Credit Card Plus may not be appropriate for you, as you will not be able to claim for the monthly benefit. Now, that was the change that was made to the online information for the customer about this exclusion from the policy.
Yes, that was the revised online script or online statement.
So, in contrast to the revisions to the script for the on the phone or in the branch sales, there's no knockout question implemented by CBA at this point for the online
Correct.
application. So that a customer using this form could still indicate that they wanted to buy this insurance in circumstances where they didn't meet the employment eligibility criterion.
They could have, yes.
And why did you choose not to include some form of knockout question in the digital channel as you had done for the by phone and in the branch channel?
Well, I think with hindsight, there was an error because we did introduce a knockout question in 2017 into the digital channels. I think the primary reason why we didn't do it in 2015 was if you sort of go back to the context at the time, the concerns were very much around the human-to-human sales process and the concern that there was pressure imposed by the salesperson on the customer to take up a product. In digital channels, the customer's reading it in their own time with no such pressure imposed by anybody on our side. And so I believe that was the reason why the changes made here didn't go further at the time.
And you accept that that was an error?
Yes.
And changes ought to have been made to the
Yes.
online process
Yeah,
so
correct.
that a customer could not have proceeded to acquire Credit Card Plus insurance if they didn't meet the employment eligibility
Yeah, correct. So we did
criterion.
make those changes in 2017, and then when we came to remediate the customers, we included digital customers up to 2017
Yes.
When that knockout question was
In
imposed.
recognition of that error.
Correct.
Yes, so it was 2 years after this point. So this document is from May 2015.
That's
It
right.
took CBA another 2 years until in the period from March to August 2017, it ensured that there was a knockout question in relation to
That's
the
right.
online form. So why 2 years to accept that that was the approach that was necessary, Mr. Van Horen?
Well, as I say, the context for the 2015 changes were very much around mis-selling and needing to have a higher bar in our sister channels. As I said, with hindsight, we should have done it earlier, but in the cold light of day when a customer is reading something like this on the screen, it is pretty clear. And if the customer did take the time to read that and said, well, actually, no, I do work less than 20 hours a week, it was fairly clearly stated. It didn't go as far as it should have and did do later.
You say it was clearly stated, Mr Van Horen, but your own internal documents show that CBA was aware that even where customers ticked yes, as they had to here, about having read this information, they may not necessarily have understood that
Yeah, that's right.
information.
Yeah, that's right.
Yes. All right. Can I move then to the remediation process that CBA commenced in relation to the sale of CCP insurance to customers? Between May and October 2015, CBA undertook an investigation to attempt to work out which customers it ought contact in relation to this issue.
Yes.
And this took quite some time because CBA doesn't hold customer data relating to a customer's employment circumstances.
Correct. So we don't have data that says the customer worked 22 hours a week or 18 hours a week or the like.
Why not, Mr Van Horen, when that was one of the eligibility criteria for claiming under the policy?
As I said, clearly we should have had that clear in our sales process. However, gathering data on the number of hours a week a customer works, you could imagine that data might be relevant today and in a month's time it could be out of date. So it's not a data field typically that we have captured in all of our systems.
ASIC was critical of CBA for its poor data on this issue, weren't they?
ASIC were critical of a number of points. I don't recall anything specifically about the data on employment hours worked.
Well, your poor data made it very difficult for you to work out which customers to get in contact with, didn't it?
It required a lot of work to understand which customers were caught in the net of the remediation, yes.
So by the 26th of October 2015, you'd identified some categories of affected customers.
Yes.
And you CBA, decided at that time to send a letter to current policyholders who'd been identified by CBA as people who may not have met the employment eligibility criterion when they purchased the product.
Yes.
Now, you provided that letter that you proposed to send to customers to ASIC, that's right?
We did.
You did that on the 26th of October.
Yep.
As well as giving them some information about the investigation that you'd conducted.
Yes.
Yes. Now, could I take you to Exhibit 10 in your statement, which is your letter to ASIC dated 26 October 2015. I'm sorry, CBA 0001 0024 0114. And it's a two-page letter, so perhaps we could have pages on the screen at once. So in this letter, second paragraph with the dot points, CBA told ASIC, we've now completed our investigation of this issue with the following findings. We currently have 43,102 customers who our systems indicate were unemployed when they purchased CCP. We have paid unemployment claims among this group. Temporary disability benefits can be claimed if the customer is working before disablement regardless of the hours per week worked. Death and terminal illness benefits are paid regardless of working status. So the number of customers identified for ASIC on this date, 43,102, was higher than the initial number given to ASIC, which you'll recall was approximately 27,000 customers, but still lower than your internal estimate of 64,000 customers. Why was that? What had caused you to get to this figure by this point?
There were a number of subsets of customers that were being analysed at the time from when the issue was first identified right through to the final resolution. Those customer groups included categories like people who may not have been employed 20 hours a week, e.g. pensioners, where we had an unknown category where we simply didn't know that there was no data captured for that particular customer. Students, as I've said already, closed, open customers. So there were various groups of customers. And so the work that was going on was to look at, how many of those customer groups had claimed benefits to get a sense of whether there was a reasonable level of awareness from that customer group as a whole. In the end, it's all the way to the 64,000 number,
Yes.
which was the final remediation number.
Yes, and I'll suggest to you now, and I'll do it in connection with documents as we go, that you eventually went to the 64,000 customers because ASIC pushed and pushed and pushed for you to do so. And at every step of the way, CBA resisted that.
I think that's a little unfair to characterise it like that. CBA certainly did take too long to arrive at the end answer, and I know from my personal involvement in this during that period, we did get to that point where we said we would go to the 64,000 number, albeit in two different categories of remediation.
Incrementally, didn't you?
Yes,
So there
it
was a
was
point at
incremental.
which you went a bit further in response to ASIC's request, and then ASIC asked for more and you went a bit further again.
Yeah.
And that happened a number of times before
Agreed.
ultimately agreeing with ASIC's request that you remediate all 4,000 customers.
I agree it was incremental, absolutely. It's one of our failings. However, I don't believe, and I'm certainly not aware, that ASIC ever made a clear request up front to remediate 64,000 customers. There was a lot of engagement with ASIC along the way to understand the different customer groups and what the treatment would be for each of those customer groups.
Well, I'll suggest to you that ASIC queried
Yep.
what you were putting forward
Absolutely,
at every
yeah.
step of the way. So you
Yep.
made proposals about who you would remediate, and ASIC queried why that was the
Yes.
limitation of your proposal and asked you to take it further. And it took a number of taking it
did.
further steps
It
for
did.
you to get to the end point of remediating all 64,000 customers.
Correct.
In this letter to ASIC, on the fourth substantive paragraph, we have now updated. Do you see that, Mr. Van Horen?
Yes.
We have now updated the CCP sales script so that we do not continue with a sale if a customer advises that they are unemployed, employed for less than 20 hours per week, or employed in seasonal work. We also continue to alert customers during the sale process to the exclusions. Now, it was correct that you had updated your sales scripts as they related to the sales in a branch and on the
Right.
phone, but it was not correct that you had updated the process to prevent this from happening on the digital channel. Is that right?
It's correct. I think the way this is phrased talks specifically about the sales scripts, which do refer to the assisted channels where there's a human interaction. The last sentence of that paragraph, which talks about alerting customers during the sales process, would have been referring to the digital side of things as well.
Do you think that would have been clear to ASIC? Would they have understood that that last sentence of that paragraph was directed to your digital channel?
It doesn't say so explicitly, and I wouldn't presume on behalf of ASIC.
No, well, it was pretty carefully worded, I want to suggest to you, Mr. Van Horen, in circumstances where it was known that there was no knockout questions stopping the process for the digital customers.
Yes.
This letter attached for ASIC's consideration the letter that you were proposing to send to your customers, and that is at 0116.
Yes.
There we are. So this is a copy of the letter that CBA provided to ASIC and advised ASIC it would be sending out to the 40-odd thousand customers that had been
That's right.
identified. Did CBA in fact send the letter in this form to those customers?
Yes.
And the key part of the letter is under the heading, "Can you claim?" So the first part of the letter gives some information about what Credit Card Plus insurance is. And then under "Can you claim?", your ability to claim on some of these benefits depends on your current employment status. Our records indicate that you may not have been working when you first purchased your policy and may not have been eligible to claim on all benefits at that time. So this was a letter that was sent to customers with open policies, current policies with CBA,
That's right.
not to anyone who had closed their policy.
I don't believe so.
And nothing in this letter told the recipient that they had been sold CCP insurance in circumstances where they may not have met the employment eligibility criterion.
Well, the paragraph does say your ability to claim depends on your current status, and our records indicate you may not have been working when you first purchased the policy, and may not have been eligible. So that was the core of that section of the letter, saying customers, you may not have been eligible.
But nothing in this letter offers any compensation to the recipient for premiums that they've paid in circumstances where they didn't meet the eligibility criterion.
Yeah, I agree. And I think, it's easy to say with hindsight, but if you look at the letters that we did subsequently send, they're a whole lot clearer than this. This one wasn't a very clear letter indicating to customers what they should have done.
Well, I'll suggest to you, Mr Van Horen, that nothing in this letter suggested to the recipient in any way that the way CBA had sold this insurance policy had disadvantaged them in any way.
I'm not sure that's... It could have been clearer, of course, but if you do read that sentence, our records indicate you may not have been working when you first purchased. So that sentence does indicate that customers may not get the benefits that they were paying for.
Well, does it, Mr Van Horen?
Well, perhaps it's open to interpretation then, but it seems to me to say that if you are not... Our records indicate you may not have been working when you took out the policy, and may not have been eligible to claim on all the benefits at the time. So it does indicate to the customer there is a possibility or probability that they weren't going to be able to claim on the benefits.
Well, nothing to tell them that they therefore ought not to have been sold that policy.
Yeah. Again, I agree the letter wasn't well crafted.
There was no offer in here to permit them to cancel their policy.
I don't believe so.
It was just a marketing letter, wasn't it, Mr Van Horen, and was viewed by ASIC in that way?
Look, I absolutely agree. It was a poorly constructed letter. It didn't achieve the goal that it should have set out to achieve, which we did do later.
But you say in your statement that after CBA sent this letter out, it considered that it had effectively addressed the CCP issue by changing its assisted channel sales process and sending out this letter.
I believe that was the view.
But you now recognise that CBA hadn't effectively addressed the issue at all. And not only did the letter suffer from the vices that we've just been discussing, but people were still able to apply through the digital channel in circumstances where they didn't meet the employment eligibility criterion for another 2 years after this time.
Correct. If they didn't see that particular clause in the digital application process and act on it.
ASIC wasn't happy with this letter, is that right?
No.
That they were not happy, is that?
Correct, they were not happy.
Yes, I'm sorry. And they told CBA that in correspondence?
Yes.
Take you to your Exhibit 12 at CBA 0001 0024 0098. This is a letter from ASIC to CBA dated 1 April 2016.
Yes.
And if we turn to 101 in the we see under the heading Letter to Customers a reference to the letter that was mailed or intended to be mailed. And can I take you to the paragraph that commences whilst the letter contained some information regarding the eligibility to claim, as noted above, we are concerned that the headline claim of how your Credit Card Plus policy helps protect you, together with the first half of the letter emphasising the benefits of the product, may detract from the message in assisting customers to assess their suitability for CCP. We're also concerned that the letter may not adequately draw the customer's attention to the possibility that they have been mis-sold the insurance product. Now, do you agree with those concerns, Mr Van Horen?
I do.
Thank you. And in this letter, if we go back to 0099, we see that ASIC asked for further information from CBA on a number of points. Do you see at the top there, in the light of the above findings, please provide the following information?
Yes.
and a written response was requested by ASIC by the 18th of April 2016. We see that from 102. And while that's being brought up, there we go, 18 April 2016. What followed after this was a series of letters that passed between CBA and ASIC for over a year,
Yes,
as well as a number of meetings between CBA and ASIC.
that's right.
And during this period, ASIC pointed out that it had about the lack of value of the CCP product.
They did.
And ASIC made a number of suggestions to CBA about how it should handle this issue, particularly in relation to which customers it should remediate and how it should compensate them.
Yes.
Now, initially, CBA didn't offer to compensate anyone.
I would need to refer to the specific document. Certainly from my time of my personal involvement, it was always on the table during that that year that you refer to.
Well, if we go back to your original communication with ASIC, which is your Exhibit 9 at 0001 0024 0118, this was the good governance notification to
Yep.
ASIC. The action that CBA indicated it would take to ASIC in this letter did not
Yes.
include any compensation for any customer, did it?
Correct, not at that time. So I thought your question was referring to the subsequent year where there was the back and forth between us and ASIC, and certainly from reasonably early on in that process there was always consideration or acknowledgement by CBA that we would remediate customers.
So I'll suggest to you that after being pressed by ASIC, an early move was to an offer to compensate people with open policies only,
Yes,
and a subsequent move pressed by ASIC again was to move to open policies and closed policies.
yes, I would add there was a lot of internal discussion about this. It wasn't just let's respond to ASIC now that ASIC has sent us a letter or said something. There was a lot of internal discussion about what the right thing to do was as well.
And in terms of the amount of the remediation, the initial ICBA was to refund part of the premiums only.
Could you point me to the specific document referring to
Yes, I
that?
can. We can go to your Excel at CBA 0001 0024 022. This is another communication with ASIC. It's one I took you to earlier, Mr Van Horen, dated the 21st of February 2017. And do you see a reference down the bottom of the page? 1. We initially proposed to contact customers recorded as students in our systems, inviting them to contact CMLA if they were not working for more than 20 hours per week at the time of purchase.
Yep.
We offered to pay these customers a fair proportion
Yes,
of premiums
that's
paid
right.
during the period that they remained ineligible to claim the employment-related benefits.
That's right.
So that was the initial offer. We'll pay.
Yep.
Well, I'm sorry. The initial offer was no compensation. That became and to pay part of the premiums. And after being pressed further by ASIC, eventually there was agreement to pay the entirety of the premiums.
For the student category, yeah.
Yes,
The
now I've got
rationale
it.
for that, one you're pointing out there, would have been that some students did claim, and so this was part of the process of arriving what was the fair outcome for that subgroup of customers.
Well, there was a lot of toing and froing between CBA and ASIC about which categories of people
There
should be
was.
paid anything as
There
well,
was.
wasn't there?
There was.
And initially, students was
Yes.
what you proposed to deal
Yes.
with. But after being pressed by ASIC over the course of this year in multiple letters, you moved to an offer to also compensate pensioners, people who were pensioners at the time of buying the product.
Yes, and other groups were added as we went along.
Yes, well, you eventually added retired people,
Yep.
and you eventually added unemployed people,
And unknowns,
and people who were performing home duties.
yes.
And some component whose occupation
Was
you
unknown, yeah.
didn't know. So ultimately, you agreed to provide compensation for people who were unemployed students at the time of buying the product by refunding all the premiums they had paid plus interest, on the basis that students were unlikely to have obtained any benefit from the policy, as they were unlikely to have dependents and unlikely to need death and terminal illness cover, and were ineligible for the other forms of cover under the policy.
Yes, so what we did with the student group was did an automatic refund if our records indicated they were a student at the time of acquiring the policy. What we refunded was 4 years' worth of premiums from the date on which they took out the policy. We believe that errs very much on the side of the customer, because that assumes that a customer studied for 4 years and they took out this policy on day one of their student period, which is, on balance of probabilities, unlikely. Nonetheless, we said we would move to a point where we would refund 4 years' worth of premiums automatically from the date on which they took out the policy, regardless of whether they were or weren't working more than 20 hours a week.
And you only agreed to refund premiums from a particular date, Mr Van Horen, which was October 2011.
Correct.
Why was that?
That's because ASIC issued their guideline, RG256, in October 2011, which was the report we covered earlier, which spelt out their expectations around the sales process. That was discussed with ASIC and agreed with ASIC that we'd start the remediation from that date onwards.
On the basis that from that time you should have been doing things differently because ASIC had promulgated its recommendations
Correct.
for how this should work.
Correct.
Is that right?
Yes.
So that's why October 2011 was
Correct.
chosen. And the question of how far to go in response to ASIC's concerns about the way the remediation program was being constructed was the subject of very detailed consideration internally at CBA, wasn't it?
Yes, it was.
Can I show you a document which is CBA 000100251404? Do you recognise this document?
I've seen it, yes.
Mr Van Horen. So it's a CCP unemployed EGM update from 6 February 2017.
Yes.
So it's an update for the Executive General Manager on that date, which is quite late in the dealings with ASIC, is that right?
Yes.
And who was the Executive General Manager who received this update?
There would have been two. I don't know if it's got it in the next page of this particular pack, but
We can bring that page up if that assists Mr Van Horen.
I would have been one of the EGMs, and Helen Troop, the Managing Director of CommSure, would have likely been the other.
Yes. Now, could I ask that you be shown 1407 in this document? Remembering that this is a document from February 2017. So do we see there under the heading Recap CCP Unemployment Issue that by this time CBA had identified 100,000 potentially unemployed customers who'd purchased the product from 2008 to 2015?
Yes, from 208 to 215.
So not the original internal estimate of 64,000 or the 43,000 notified to ASIC, but now 100,000 over that period, comprising 69,000 students, 26,000 others and 5,000 unknowns.
That's right.
And if we move to 1409, we see that there were 4 models discussed within CBA for how to go back to ASIC about these issues, which ranged from a reactive refund. Do you see that in option 1
I
over
do.
on the left?
Yes.
A reactive refund of part of the premiums, right down to option 4, which was a proactive refund of all the premiums for students and a reactive refund for others. And this document discusses the pros and cons of each of those models.
That's right.
Can you explain the difference between a reactive refund and a proactive refund?
So a proactive refund would be the kind that was ultimately done for the student population. In other words, we would have sent the student a letter, the customer a letter, and said, we are refunding you $X, and that refund would have automatically been processed if we had a bank account for them, or a cheque was sent to them if we didn't. Reactive means where we don't or didn't know. So this was the other categories of customers like unemployed or retired or home duties, etc., where our data didn't tell us they were or were not working that minimum 20 hours a week. We then sent them a letter saying, please, our records indicate, etc., please let us know if this is the case, that you weren't working 20 hours a week, in which case we will issue a refund.
And if we turn over to 1413, we see a diagrammatic representation of the evolution of your approach to how to remediate people for this problem. We see your original commitment was restricted to students with open policies and a partial refund on a reactive basis.
Yeah.
And then this diagram depicts the evolved position as well as the ASIC position. So there's still not harmony between where you've got to at this point and where ASIC would like you to get to.
That's right. That came about, where I say harmony, that overall approach was agreed in April 2017. This was all a lot of preparatory work leading up to that meeting. I attended that meeting in April myself, along with Helen Troop and a few others, where we finally settled the approach.
I tender that document, Commissioner.
Exhibit 1.100, CBA 0001 0025 1404 CCP unemployed EGM update 6 February 17.
Mr Van Horen, we see references in the documents to call to action letters. Does that connect up with the reactive refunds? Is that a reference to a letter that requires the consumer to come back and tell you give you some information before you can consider whether to make a refund?
Yes, that's what it refers to. We didn't want the action imposed on the customer to be onerous, and this was something that ASIC discussed with us as well. But it did require the customer to do something in order to get the refund.
In contrast to a proactive refund letter, which would just tell the customer that they were getting a refund.
Correct.
Yes. And I want to suggest to you that at least part of the reason that CBA was keen to deal with this by call to action letters or reactive refunds is because your documents reveal that you knew that customers were unlikely, large number of customers were unlikely to take up the invitation to engage in action in response to those letters.
I don't think that's quite as simple as that. We had to get the right balance here in terms of principle and setting the right precedent. So it was not...
Precedent for what?
For whatever else may happen in different remediations, because unfortunately there have been a number of different remediations around the bank. The purpose of the way we want to do this call to action was in a very simple way. We did debate internally whether we would ask customers to demonstrate at the time of taking out the policy what their working status was. For example, a payslip which might have said we're 37 hours this week or 7 hours this week. We decided not to do that because we didn't think that would be a fair thing to do for those customers given the circumstances. And so in the end, the customer simply had to let us know I was not working the minimum number of hours a week, in which case we then made the refund.
So there were nonetheless a call to action letter in that there was action that had to be taken by the customer to move through to a potential refund.
Yeah, there was. And I think there was good reason for that as well, because our data indicates that some of those customers were working more than 20 hours a week. However, to go through the entire base and have a very different approach by customer, we thought that would be very onerous on them as well.
Well, you have internal data, don't you, Mr Van Horen, on the take-up rate of call to action letters.
Correct.
And you know that the number of customers that respond to those letters, you know that it's approximately 30% of people who respond to those letters.
Correct. For this remediation, it's been around 30%.
Yes. And in fact, when it came to budgeting for remediation in connection with a subsequent problem, the LPP product problem that we'll come to, you in fact budgeted on the basis that approximately 30% of recipients of your letters would respond.
Yeah, budgeted is a word, but I think the more correct word would be we raised a provision. So in our financial statements, we need to raise a provision for what we think the future costs would be. And our best point of reference was the response rate to the first CCP remediation.
So you worked on an assumption that if you sent out this form of letter, 70% of people would not respond to it and you would not need to pay them any refund.
Yes, but bear in mind, as I said, that of that, a large proportion of those customers could well have been working the minimum 20 hours a week.
Mm-hmm. The finalised approach of CBA to remediating for the CCP problem is dealt with in a table in your statement at paragraph 57. This was a table that you made an amendment to
Correct.
at the start of your evidence today, Mr Van Horen.
Yes.
We see that there. And I'm sorry, that goes across 2 pages of your statement. And as at the 24th of August 2016, CBA estimated internally that impacted customers had been paid a total of about $11 million in premiums and had received about $0.5 million in claims paid out. Is that right?
Those numbers are not in the statement. They come
No,
from another source.
They're in a document annexed to your statement, Mr Van Horen, your Exhibit 12 at CBA 0001 0024 0189. So this is another letter to ASIC, part of the year of communications with ASIC, and we see at the bottom of 0190 that ASIC had asked for information from you about the total amount of premiums paid by impacted customers and how much in benefits have been paid to impacted customers resulting from CCP claims.
I see that.
And CBA responded that impacted customers have paid a total of $11 million in premiums. I'm sorry, I think I put this incorrectly to you before. They've paid a total of $11 million in premium and have received $0.5 million in response to claims made.
I see that.
That's correct?
Yes, for that period.
Yes.
It's not the same as the loss rate, however, I might
No.
point out.
No, and
Talk
I
about
understand
separately.
that. Now, in terms of the remediation paid out, you tell us in your statement that CBA's paid approximately $9.8 million to date to customers under the CCP remediation program.
That's right, at the date of the statement, that was correct.
And what is the amount paid out as of today's date? Mr.
Slightly
Van
more,
Horen?
so it's 9.9.
9.9 million. And when will CBA finish paying customers under the CCP remediation program?
So as of last week, we had made all of the refunds to the students. So that was in round numbers 47,000 students. Those refunds were made fairly early. Of the remaining 17,000, there are about 600 cases that are more complex, where we agreed with ASIC we would do what we call a multi-channel communication strategy. In other words, write them a letter. If we didn't get a response, we would email, SMS, and so on. These are cases where typically there could be deceased estates. So there's about 500 or 600 that we're still working through. We expect to complete those in the next month to 6 weeks.
And is that when you expect to complete the remediation payments?
Correct.
Yes. So all of
It's not a long time. So between resolving the status of a particular claim and making the payment, that's a matter of days before the payment is made.
So within the next 6 weeks, you anticipate you'll
Yes.
finish the remediation, and what do you anticipate the total amount
It'll
of
be
remediation?
of the order of $10 million. So
Thank you.
it's going to be give or take $10 million.
Now, I want to show you ASIC's media release about this issue before we move on to the other insurance product that you deal with in your statement. That's at RCD 0021 0001 0001. Have you seen this document before, Mr Van Horen?
Yes.
And the media release records that CBA sold CCP insurance for credit card repayments to 65,000 customers who were unlikely to meet the employment criteria and therefore would be unable to claim the insurance.
Yes.
Now, the media release also refers to another problem with home loan protection insurance. CBA hadn't adjusted the amount of cover under the insurance policy where the amount the customer borrowed was less than the original loan that they applied for. Do you see the reference to that in this document down the bottom of the first page, Mr. Van Horen?
Yes, that was an entirely separate matter where there was an error in the charging of premiums on certain common insure policies.
So this is one of the other remediation programs that you were referring to earlier. So CBA charged these customers, different customers, for more cover than they needed under the policy. Is that right?
Different customers, different root cause, no overlap with this population as far as I'm aware.
Yes, an entirely different problem
That's right.
that arose for entirely different reasons.
Yes.
And this problem affected around 10,000 additional customers,
I
is that
believe
right?
so, yeah.
And CBA, according to this media release, was to refund them approximately 586,000 in premiums.
That's right.
You'll see that from the fourth paragraph down in the document, Mr. Van Horen.
Yes.
Has that been done?
To my knowledge, I'm not directly involved in this one, but I have inquired, and that remediation, I'm told, is on track.
What does that mean?
I don't know whether the payments have been made. I could check and revert to you.
What do you mean when you say it's on track?
It's been agreed with ASIC. The program has a communication plan as in how customers are communicated with and refunds are made.
So it appears to have been agreed with ASIC back on the 14th of August 2017 when this media release was issued. What has happened in terms of making the payments to
I'll have
customers
to
since
check
that
on
time?
that. As I say, I'm not managing that area, so I can check and revert if required.
All right. I tender that media release, Commissioner.
Exhibit 1.101, ASIC Media Release MR 17-268 MR RCD 0021 001 001.
Now, Mr. Van Horen, from at least 2011, CBA offered another product issued by CommInsure, which was styled the Loan Protection Product for personal and home loans.
Yes.
And that's referred to in many of the documents we see as LPP insurance. Yes. But it was really two separate
It's actually two products, yeah.
Yes.
Personal loan protection, or PLP for short, and home loan protection, or HLP for short.
And how long has CBA sold those two types of insurance?
Similar, I believe, back to 2003 as far as I know.
And that LPP insurance provides two different types of insurance cover, being loan cover, which covers the customer's loan liability in the case of trauma, terminal illness or death, and loan repayment cover, which covers the customer's loan repayments during a time that the customer experiences involuntary unemployment or disability.
That's right.
So unlike CCP, LPP was an unbundled product.
Yes. There's a slight complication, which is that after November 2015, I believe it was, the personal loan protection component of that policy was bundled. So it became like CCP. But yes.
But prior to that time, it was unbundled.
Correct.
In the sense that benefits could be selected individually or all together.
Correct. A customer could choose which of those two, one or both types of policy they wanted.
And the premium was then calculated according to the choices the customer had made.
But in the case of PLP, the reason it then became bundled was that the premium was the same, so it made sense to offer both of those to customers as a bundled policy post-2015.
And customers were offered LPP insurance as part of their application for either a CBA home loan or a CBA personal loan?
Yes.
And the offer again was made either in a branch, on the phone or online?
Yes, the channel mix is very different, especially for home loans, because as you know, a small percentage of home loans are sold or purchased online. The mortgage broker and the branch or the bank's sister channels are the primary channels for home loan protection.
Yes. And customers could also apply for it after they got their home loan or personal loan.
In the same way as with CCP, yeah.
But again, this wasn't common. People mostly acquired it
Majority
at the
were
time.
at the time of acquiring the original product.
And during the period from 2011 to 2017, you tell us in your statement that 42.64% of CBA personal loans had an associated LPP policy.
Yeah, in the same way as we discuss it for CCP, the same methodology applies here.
But higher numbers here.
Yes,
getting
higher
up
for
towards,
PLP, lower for HLP.
Yes, so for the personal loan product, we're getting close to half of your customers who have the associated insurance.
Yeah, a little shy of half, but
Yes, 42.64%. And you said the numbers were lower in relation to home loans. There were only 10.34% of CBA home loans that had the associated policy.
That's right.
The uptake, therefore, we can see was much greater in relation to personal loans than it was for home loans.
Yes.
And like CCP insurance, CBA staff have sales targets for selling these products,
Yes.
and selling above those sales targets can lead to rewards.
I think exactly what we discussed in CCP applied here. So no direct sales correlation or commission for sales of PLP or HLP. Certainly nothing remotely like that since those specific incentive schemes were scrapped in 2014.
2014,
Yeah.
yes.
And all targets today are branch-based, not individual-based.
But volume of sales is still relevant to the remuneration of
Marginally relevant.
Yes, I heard you
Marginally
say
relevant.
before it was marginal, but it remains one of the factors that's considered in a remuneration package for a CBA
Yes.
staff member.
Yeah.
Yes. Now, like CCP insurance, there were eligibility criteria,
Correct.
which were the same. The core eligibility criteria were the same. You needed to be between 18 and 64, an Australian resident, and have a CBA personal loan or home loan.
Yes, bear in mind the eligibility differed between those two products you described earlier, loan cover, loan repayment cover. The employment criteria did apply to loan repayment cover, not to loan
Yes,
cover.
I'm
So-
sorry, I'll come to the
Yeah.
employment eligibility criterion, but they had those core.
The age, there was a different age cutoff, I believe, for, it was 54 or 55 for the home loan protection product.
So you could only get the home loan protection product if you were between 18 and 54,
Correct.
not 64, I
Correct.
see. But as with the CCP product, you had processes in place that ensured that the product wasn't sold to people who
Yes.
didn't meet those criteria. And there were employment eligibility
Yes.
criteria again, which you just mentioned. And I'll summarise what I understand about this, and you can correct me if I'm wrong. In summary, a person could only claim loan repayment cover for loan repayments in the event of disability or involuntary unemployment if they met the employment eligibility criterion.
That's right.
But there was no such criterion in respect of loan cover,
That's right.
which related to their loan liability in the case of death, terminal illness or trauma.
Correct.
Okay. So in this respect, the CCP and LPP exclusions had similarities but were not identical.
Yes.
And as it had done in May 2015 for CCP insurance, in October 2015, CBA introduced a question into the LPP application form used in CBA branches and call centres, which was a knockout question that meant that the application would not proceed if the employment eligibility criterion was not met.
Yeah, that's right.
Can I take you to your Exhibit 13? CBA 0507 0013 0001. So from October 2015, for home loans, this is a document that is the home loan related document, is that right?
Yes, same would have applied to personal loans.
Yes, you have the personal loan document as part of your statement as
Yep.
well, but for home loans,
Yep.
the question that a customer was asked after you made these changes is highlighted. In the last 3 months, have either of you worked on average at least 20 hours a week in employment that is not seasonal in nature? If yes is selected, would you, either you or like to have cover for your minimum monthly loan repayments if either of you are unable to work? How about cover for your loan balance if one of you are diagnosed with medical trauma or pass away?
Yes.
So this was the change that was made for home loans in October 2015.
Correct, so-called knockout question.
That's the knockout question. And in relation to personal loans, 0507 0013 0005. The relevant question is in the end of the first third of the page. In the last 3 months, have either of you worked on average at least 20 hours a week in employment that is not seasonal in nature? Yes or no?
Yes, same applies.
Well, you say that, but for this second document, the personal loan document, there's nothing there to suggest that the sales process stopped if that question was answered no.
It certainly was a knockout question, so if the question was answered no, then it would not have proceeded.
And how do we see that from the script that you've provided for us, Mr. Van Horen?
It is difficult to see it, and there may be another version of the script that has it clear, but the same knockout question did apply from
Well,
introduction
where
of
do
this
I
question.
see it, Mr. Van Horen? The script I see there does not have it as a knockout question. If there's some other script, when are you going to produce it?
We'll have to go back and find that.
Well, I'm going to suggest to you that you didn't insert the knockout question until much later, Mr. Van Horen. So at this point, based on these documents, it appears there's a knockout question for home loans but not for personal loans. And I just want to emphasise for you that your evidence was that personal loans had the highest uptake of all three products for the credit insurance. They had the 42% uptake in comparison to the 10% uptake for home loans, for example.
They did, but
Yes.
I don't think that's a result of this because that coverage rate referred to the period prior to the introduction of this new question.
Well,
So I don't think we should
want
conclude.
to find out when this new question was added, because it's not in this document that you've provided. Do you agree with that?
I agree with that.
And what I want to suggest to you is that it wasn't until June 2017 that the knockout question was added, some 2 years later. And can I take you to your Exhibit 24? At 0009. Is that the right page? Oh, I'm sorry, CBA 0507 0013 0009. Now, as I read your, no, I don't think we've got the right,
This is
yes,
the-
we do. Do you recognise this document, Mr.
Yes,
Van Horen?
this is the knockout question in the digital channel,
Yes,
which was introduced in 2017, as you
I
said.
see. So,
So this was, the one we looked at previously was the sister channels, the branch and call centre. This one refers to the digital channel.
so this first page relates to the personal loan through the digital channel.
That's right.
And if we go over to 0011, we see the digital channel for home loans.
Yes.
So, and these documents are in a difficult form to read, but you accept, I think, from your answer that it wasn't until these documents were created in June 2017 that customers applying for home loans or personal loans on the digital channel
Correct.
received a knockout
That's
question.
right.
And do you maintain that in relation to the assisted sales channels in branches and over the telephone, there was a knockout question in
2015.
in 2015.
Yeah, that's certainly my understanding. I do agree this document does not show that. We will revert and check on that.
I'm sorry, if we could just go back to where we had that document zoomed in. I just want to understand a reference in here to knockout Q. Now, I'm sorry, we need to go to a separate page because this is the home loan one. If we go to the personal loan one, which is 0009, I want to ask you about the entry under knockout Q there.
This is 0009 we're in. Is that the one you want?
Oh, I'm sorry. Yes, here we are. Knockout question, hours worked / seasonal employment. Yes, live in R46.1, 9 June 2017. Can you explain what that means, Mr. Van Horen?
Sure. So R46.1 stands for Release 46.1. We have a number of releases of our various systems, and Release 46.1 is simply that release, and that refers to the date in June 17. So this, as I said, covers the digital knockout question,
Yes.
which was introduced in 2017.
Does this suggest that for the non-digital channels, the knockout question was introduced on the 9th of June 2017?
No, that's not what it's saying. That this one is referring to PLO. If you look at the top of that page, personal loans origination is the digital origination flow or system or path for our online personal loan applications, in which the personal loan protection policy was embedded.
So I want to try and summarise where I think we've got to, Mr.
Yes.
Van Horen. It's clear from the home loan assisted channel document that we started with when I started this series of questions that in October 2015 you introduced a knockout question.
That's right.
For that assisted sales channel.
Yes.
But you did not deal with the digital channel at that point. You only dealt with the digital channel 2 years later in June 2017.
Yep, the same as the CCP. So high level, if I can try and summarise it all. So in both Credit Card Plus and the LPP products, the knockout question was introduced in 2015 in our sister channels, branch, call centre and so on, and in 2017 in the digital channels. And in the meantime, as we discussed for CCP, reliance was placed incorrectly. Too much reliance was placed on those disclosures in the digital origination path around eligibility.
So there's a 2-year delay for the digital channel, but in addition to that, you're unable to point to any document that shows that a knockout question was imposed for personal loans through the assisted channels in 2015.
Yeah, it's not in that document in this exhibit. We'll check if there's a one that does confirm that.
Now, in October 2015, when the changes for the assisted channels were made that we've just discussed for home loans and personal loans, CBA was aware at that point that LPP was being sold to customers who may not have met the employment eligibility criterion, and that was the reason for the changes, wasn't it?
The reason for the changes was to try and get a common and consistent approach that was meeting our internal and ASIC's expectations for making sure we got the eligibility criteria right.
Well, I'm suggesting to you, Mr. Van Horen, that at that point in October 2015, you knew that the problem was not restricted to the Credit Card Plus insurance. CBA knew that it was also a problem for the LPP insurance.
Yeah, so I can expand on that a little.
Well, I'd be grateful if you could first just answer my question. Do you
did we
accept
know-
that
did we know-
CBA
Just a
knew?
moment, Mr. Van Horen. Listen to Council's question and answer that.
In
Yes, Ms. Orr, put the question again.
In October 2015, did CBA know that the same problem that had arisen for CCP, customers were not eligible to claim because of the employment eligibility criterion, was also a problem for the LPP insurance product?
We knew that there was, that the similar problems could occur. We did not know how many customers would be affected. We had based our analysis on assumptions around the nature of a home loan or a personal loan is quite different to the nature of a credit card, and therefore, in the sense that people are far more likely to be employed when they're taking out a home loan, and therefore our assumption, flawed again, at the time, was that to the extent any remediation would be required for LPP, it would be much smaller.
Well,
Based on that assumption, and I know that with hindsight,
just try and
that's
unpack
incorrect.
that a little bit, Mr Van Horen.
Sure.
You knew in October 2015 that the problem extended to the LPP product.
Yes.
You didn't know how many customers it affected yet, but
Yes.
you knew that there was a problem that affected customers.
Yes.
All right. And when did CBA first become aware of that problem for LPP?
So the problem was known in the sense that the sales processes had followed the same course as CCP. We first became aware of the issue as a group in May 2017 when an issue was raised in our internal risk insight databases saying that we had an issue with our LPP product around eligibility.
Well, I'm going to put to you squarely, Mr Van Horen, that is not when you became aware of this issue. You did not become aware of the issue in 2017. You were aware of the issue in October 2015. Customers,
I think you need to, if we can try and unpack what were we aware of.
well, you were
aware
aware
of-
that the product was being sold to customers who would not meet the employment eligibility criterion to claim.
We were aware that our sales processes were deficient. We had not yet identified customers or groups of customers that were ineligible. The conversations that we had with ASIC all along were very focused on CCP, and this was an industry-wide thing, but certainly for CBA. When we met with ASIC, the conversation, and I was in this meeting, and it's certainly my recollection of the meeting, we said that having sorted out CCP, we would move on to LPP. Again, we should have done it earlier. I'm not going to deny that for 1 second. We should have done it earlier. But the assumption was that the number of customers that would be affected in LPP by the same root cause issue was much, much smaller.
Well, just to be very clear about this, you knew at this time that it was a problem that would affect customers. You just did not know the size of the problem, and you chose not to investigate the size of the problem in 2015.
I was certainly never aware there was a deliberate choice made by myself or anybody else saying we are choosing not to investigate this issue. Our focus was very much on fixing the CCP problem, fixing the problem on a go-forward basis in all of our channels, and then to look and see if we would have to remediate anybody in the LPP
So
space.
did you investigate the LPP problem in 2015?
Not to my knowledge.
No. Could I show you a document, Mr Van Horen, which is CBA 0001 0025 1453? Could you explain what this document is, Mr Van Horen?
Yes, we have an internal database called Risk Insight, which is our single source of all and the like. And this page you see is an extract of the Risk Insight entry that was made on the 31st of May 2017. It referred to the LPP matter off the back of the original CCP matter, which is why the incident occurrence date would refer to the CCP matter, but this matter was only identified in May 17.
Why do we read the incident occurrence date of 7 May 2015 as referring to the CCP incident when this document is about the LPP incident?
Yeah, that is the only logical explanation I have for why that incident occurrence date refers to 7 May 2015.
Well, it's because, isn't it, Mr Van Horen, that CBA knew from 2015 that there was a problem with the LPP insurance?
Well, I can only restate what we said earlier. We knew that the root cause of the scripts weren't addressed until 2015. We did not know that there was a significant number of customers to be remediated.
No, because you had not investigated to find out how many customers were affected, had you?
That's correct.
Yes. So the incident discovery date on this document is recorded as the 29th of May 2017. What happened on that date?
So I believe what happened was CommInsure had been investigating this matter, doing background work, try and understand the number of customers that could be impacted. On the 31st of May was the date on which this was entered into Risk Insight.
And what was the discovery that occurred on the 29th of May?
I couldn't really answer what happened on that specific day. I know CommInsure had been doing work on this issue and had quantified the fact that there were going to be some customers impacted by the eligibility problem.
Well, I'm going to suggest to you, Mr Van Horen, that the incident was not discovered on the date recorded here of 29 May 2017. The incident, as described under incident name in this document, was discovered in 2015.
Yeah, I can cover the same ground again
Yes.
if it's helpful.
No.
You would like me to? Or?
No,
No.
unless you have anything further
No.
to say about that, Mr Van Horen. So in 2000, I'll tender that document. Thank you,
Exhibit
Commissioner.
1.102, CBA 00010025 1453, Risk Insight Incident Report 31 May 17.
So your evidence has been, Mr Van Horen, that CBA decided not to or CBA did not investigate the LPP issue in 2015. You said that you didn't know that there was an active decision not to do
Correct,
so.
that's a better way to frame it.
But there was no investigation of this issue in 2015.
No, I think our problem, our mistake, one of a number was to manage this sequentially and sort out CCP first and then move on to PLP.
That was a problem or an error that affected customers, didn't it, Mr Van Horen?
Yeah, that's right. And so part of our approach to all of these matters, and I fully appreciate it's not only about financial compensation, there's a lot more. There's real customers, real human beings affected by these things. But all along our principle was that we would compensate customers, whatever that number was, to put them in the right position, and we would adjust for any interest that they had incurred or the time value of money, so that at least from a financial point of view, if not in all other respects, from a financial point of view, customers were not disadvantaged.
There was no report to ASIC about the LPP issue in 2015,
No.
and the only action that CBA took in relation to the LPP product in 2015 was to make changes to the scripts that we've looked at in October 2015 for the home loan part of the product and the personal loan part of the product.
That's right.
To take no action in relation to digital sales of the product. Nothing happened there until 2017.
Well, the same applied as on the CCP side, so disclosures in the application flow, which with hindsight we should have introduced the knockout questions earlier, but they were there.
In your statement at paragraph 98, you say that CBA decided it would prioritise the CCP matter on the understanding that the scale of the issues in relation to the LPP matter would be less than for the CCP problem.
That was certainly the expectation at the time.
And why did CBA think that the scale of the issues for the LPP issue would be less?
Because if you think of the basic problem we were trying to address here was eligibility from an employment point of view, and an assumption around the eligibility requirements for a home loan are quite different to a credit card, or even a personal loan are different to a credit card. And therefore, our assumption, incorrect, was that fewer customers would have not met the employment criteria for those two products.
And you made that assumption in circumstances where you knew that the uptake of LPP for personal loans was much greater than the uptake of CCP for credit cards?
Yes, two different points, but yes.
Yes, but the potential customer base who would be affected, that was a relevant matter for that, wasn't it?
It didn't feature in our thinking about what to do, but it's a fact that there are more customers in the PLP.
And was
remediation.
the scale of the issues in relation to the LPP product in fact less than the scale of the issues for the CCP product?
As we sit here, we think that there are more customers who are potentially ineligible for LPP than were for CCP.
Yes, so it was actually a bigger problem, the LPP problem, affecting a greater number of customers than the CCP
Correct.
problem.
Correct.
Now, having logged the issue on the Risk Insight database in May 2017, you say in your statement that CBA then spent a number of months working to analyse the nature and scale of the problem. That's at 106 of your
Yes.
witness statement, Mr Van Horen. And you say that in or about late September 2017, CBA's analysis of the issue was continuing and CBA was preparing to notify ASIC about the issue. That's at 111 of your witness statement.
That's right.
So this was more than 2 years after the May 15 date referred to in the Risk Insight database that you were preparing to notify ASIC about the issue.
Yes, we'd met with ASIC in April 2017 to settle the CCP remediation approach. Indicated in that meeting that we would then look at whether there were issues of a similar nature in LPP, and that's...
I'm sorry, do you say you indicated that to ASIC in a meeting?
Yes.
Do you have any document that records
No,
that?
that was my recollection of the meeting. I checked independently with another person who was in the meeting, and that was their recollection as well. It's
so
not recorded in the documents.
And when did
from
that
the
meeting occur, Mr
It was
Van
April
Horen?
17. It was the one where we settled the CCP approach.
Well, ASIC had in fact asked you in correspondence over the course of your communications about CCP, they had asked you whether there were issues with any similar products, hadn't they?
There were certainly a number of questions. I'd have to check whether there was a specific question on that.
Well, can
on
I
that
show
point.
you CBA 0001 0025 0173, which is part of your Exhibit 12. This is a letter to CBA from ASIC dated 21 October 2016. And if we go to 0178, the final page of that document, we see that in October 2016, ASIC said to CBA, please confirm if CBA's improvements in the scripting and monitoring of CCP also covers potential similar issues concerning the distribution of other products that may have unemployment or income features.
Yes.
You see that?
Yes.
And can I take you to CBA's response to that letter, which is CBA 0507 0014 0001. This is a letter from CBA to ASIC dated 25 November 2016 that responds, do you see, responds to the
that,
21 October letter?
Yeah.
And if we go to 0008 in that document, we see CBA's answer to that question. Improvements in scripting have been made for other loan protection products that have employment-related exclusions similar to CCP, and call monitoring is undertaken across direct banking. We are also reviewing the online application processes for these products to align with planned CCP changes.
Yeah.
So at this point, you're telling ASIC that you've changed scripts for other products, but you have not reported the LPP issue to ASIC.
That's right. So we said we had fixed the scripts across all of our products. At that stage, we still did not know that there were significant customers potentially affected.
And you did not know because you hadn't investigated that.
I think that's fair to say.
Yes, and you hadn't even logged it onto your internal risk database
Correct.
at this time. Now, back to the chronology of notification of ASIC, in your statement I mentioned, you said that in late September 2017 you were preparing to notify ASIC about the issue. But before you could do that, on the 25th of September 2017, ASIC contacted you in relation to
That's
the
right.
issue. Is that right?
That's right.
And ASIC asked CBA whether its investigation into CCP insurance had included an investigation into the LPP product.
Yes.
And ASIC expressed a concern to
Yes.
CBA that it had not been notified by CBA of the likelihood that the LPP product was affected by a similar problem.
That's right.
And ASIC and CBA agreed to have a discussion about this, and there was a teleconference on the 27th of September last year. Is that right?
That's right.
And you weren't part of that teleconference, but you received a report about it by email
Yes,
on the
that's
same
right.
day.
Yeah.
And you know from that report that ASIC was not happy about the fact that CBA had not reported the LPP problem to it.
That's right.
Could I ask that you be shown ASIC 0010 0001 0613? You've been shown this document, as I understand it, Mr Van Horen. It's an internal ASIC file note of that teleconference on the 27th of September 2017.
Yes, I've seen it.
And you see there under the heading ASIC, Monica provided an outline to the reason for the teleconference, namely ASIC recently received information regarding a consumer who was sold CCI with a personal loan who did not appear to meet the employment definition of the product and have since been offered by CBA an ex gratia payment. What's an ex gratia payment, Mr Van Horen?
I would understand that to be a one-off payment in relation to the query or complaint that the customer had raised.
And do you know why this customer was offered an ex gratia payment by CBA?
No, I haven't had sight of the individual customer matter. I'm aware of the process around all of this, though, which I have reviewed. Happy to talk about that.
We'll come to that.
Okay.
I want to understand what you know about this first, because what this document tells us is that ASIC learnt of
Yep.
the LPP problem because a customer came forward and told them of the problem, and also told ASIC that CBA had paid them an ex gratia payment.
There was a customer who had complained, if it's the same, I believe it's the same customer being referred to here, who had complained to FOS. That FOS complaint found its way back to, through our standard process, to our retail bank compliance team, and that team was investigating the specific complaint, which did relate to the broader question of eligibility for LPP benefits.
And why was the ex gratia payment made to this customer?
I would need to check on the circumstances related to that. I wasn't party to that decision at all. The teams who manage these complaints have mandates to address complaints and resolve complaints quickly, and depending on the delegation, those decisions would be made on the spot by the person dealing with.
I'm sorry, you said you weren't dealing with it?
No, it would be made by the person dealing with the complaint on the spot.
And do you know the quantum of the ex gratia payment
No.
that was made to this customer?
No.
So we see from this file note under the heading CommInsure that Craig, who's the General Manager of Life Products and Distribution at CommInsure, advised those on the teleconference that they, CBA, are aware of potential issues extending to other products and is subject to legal feedback in terms of what they can do. The number of consumers potentially impacted would be relatively lower than that seen in CCP, however, unable to provide rough numbers at this point, still working at the data. The payout figure per person, however, would be higher due to the nature of products sold with CCI. Jennifer raised, and we see from the top that Jennifer is Senior Manager DCI. That's within ASIC, as I understand it.
Yes.
Is that right? Jennifer raised that we wrote to CBA CommInsure in October asking whether the issues seen in CCP potentially extended to other products, raised concerns as to why ASIC was not informed by the bank, but rather through a complaint to the consumer. It was further raised whether the matter should have been reported under the breach reporting obligations. Larissa from CBA advised that the focus was to solve the problem with the underlying issue of CCP. It wasn't until recently that the bank have gone back to look at customers and is currently subject to legal advice as to what they can or can't do with the issues, as the matters are complex. For example, changes were made to the mortgage product more recently. That is what is recorded by ASIC as to this teleconference. I tender that document, Commissioner.
Exhibit 1.103 will be ASIC 0010 0001 0613 ASIC file note 21 September 17.
CBA made its own file note of this conversation, Mr Van Horen?
I believe that would have been the email that Larissa circulated.
Yes, it was
Yeah.
sent to you, wasn't it?
Yes.
Yes, and could I take you to that? It's CBA 0001 0027 3000. Now this might need to be magnified. The writing is quite small. But we see that this is an email from Larissa, who participated in that teleconference,
Yes.
to people that include you and Matt Coman and Helen Troop, who you've also referred to. And there is a summary of this conversation with ASIC, noting ASIC's disappointment at having found out about the issue via a complaint rather than from CBA. And do you see the reference to their view that this is a systemic issue that is reportable to ASIC?
Yes.
And this document records that CBA told ASIC that CommInsure had looked into the potential for the unemployed customer issue to impact CCI products other than CCP, and had implemented scripting and process changes to ensure this did not continue to happen.
Yes.
And that the initial focus was on CCP as there was more significant customer impact, although that didn't end up being the case.
Correct.
Yes. Do you see the reference to, under it is likely that ASIC will take a strong approach to this matter given the concerns expressed?
Yes.
ASIC's focus may extend beyond the insurance issue to consider compliance with breach reporting obligations, compliance with responsible lending, risk management, culture, accountability, etc.
Yes.
And legal advice was received today, and a breach notification will be prepared as a matter of urgency.
Yes.
I tendered that document, Commissioner.
Exhibit 1.104 CBA 0001 0027 3000 email 27 September 17 Shafir to Coman and others.
Now, ASIC wrote to you after this teleconference as well on the 28th of September 2017, and that's Exhibit 25 to your statement, CBA 0001 0025 0606.
That's right.
And there's a reference here under the heading complaint received by ASIC to the complaint from an individual who was sold loan protection in 2014 and who allegedly did not meet the employment criteria of the product at the time of sale. The person's claim under the loan protection policy was denied due to the employment criteria not being met. We understand that the person has since been offered an ex gratia payment from CBA. Now, ASIC expresses in the next paragraph concern to CBA that the eligibility issues arising from the sale of Credit Card Plus to CBA credit card customers may extend to customers sold loan and mortgage protection insurance who didn't meet the employment definition and would therefore receive minimal or no benefit.
Yes.
And ASIC expresses the view in this document on the, perhaps if we could have the second page brought on the screen as well, that these are issues that require a significant breach report under Section 912D of the Corporations Act.
Yes.
And ASIC tells CBA that they want to have a report from CBA by Monday, 9 October 2017.
Yes.
So then, on the 4th of October 2017, more than 2 years after the issue was first identified and about 2 years after the changes to the scripts for LPP, CBA formally notified ASIC of a significant breach under Section 912D.
We did notify them, yep.
and that letter containing that breach notification is Exhibit 26 to your statement, CBA 0001 0027 3043.
That is.
It's a two-page letter with an annexure. If we could have the 2 pages brought up. CBA didn't tell ASIC anywhere in this letter that it had known about this issue since 2015.
Well, known about this issue. We did not know the number of customers. So I think the test
Let's just understand each other. Knowing the number of customers is one thing. You knew that there was at least a possible issue, didn't you, in
Yes.
15?
Yes.
Well, number of customers is a further step down the track, isn't it?
It is.
You knew there was a problem. You did nothing about it till 17, did you?
From a remediation point of view, correct, yeah.
Or reporting point of view?
Or reporting point of view.
Or an investigation point of view, Mr Van Horen.
What am I to make of that, Mr Van Horen?
Yeah. I think it's clear there were a number of errors of judgment on our part, and I'm not going to pretend that wasn't the case at all. The question is whether there was deliberate intent or deliberate...
Let's attribute goodwill all around the shop and let's assume that it was just a series of unintended consequences. What am I to make of that?
Do you want me to try and answer that?
You're the person representing CBA in the witness box, Mr Van Horen. What do you say I am to make of that on the assumption that there was no malice, there was a series of unintended consequences, all of them coincidental? What am I to make of it?
Yeah, I think a couple of points, Commissioner. The first is definitely no malintent. Was there poor judgment? Was there poor execution on our part? Yes. Did we make a number of errors of judgment along the way? Absolutely. Should we have reported it to ASIC earlier? Yes. Part of our assumption always was, rightly or wrongly, that we would put customers right in financial terms, that they would be no worse off, and that included compensating for interest or time value of money where appropriate.
Is that to assess things on the best possible footing for CBA, namely no malintent, series of unfortunate mistakes all coincidentally occurring? Is that right? That's the best set of circumstances to be considered, is it? Because the alternative that I want you to consider is whether it is open to me to conclude that CBA swept the problem aside in the hope it would go away.
Yeah, I can say with conviction that CBA, certainly in all of my engagement on this matter and everything I've observed from investigating, had no intention to sweep the matter aside or pretend it didn't exist. It's always been our intention that if we know there's a problem, we'll fix it and we'll put customers right. And I do believe whilst we have absolutely been too slow in this case on numerous occasions, when we have known there's an issue, we have moved as quickly as we can to try and address the issue.
Well, I'm sorry, Mr Van Horen, but I've put to you a number of times already, you knew there was an issue in 2015 and you did not move to address that issue in 2015.
Yeah, and I accept that in relation to LPP.
Yes.
So our attention was all on CCP and we were moving too slowly, but we were absolutely moving to close that issue down.
The CCP issue.
CCP, yeah.
Thank you.
And our mistake was doing it one after the other sequentially, not in parallel.
While customers were still buying the LPP product in circumstances where they may not have been eligible to claim under it.
Not true for sister channels, potentially true for digital channels until 2017.
Could I show you, and next to this letter, at 30430003. Yes, the 912D notification, Mr Van Horen.
Yes.
And we see there that the notification was made on the basis, do you see 3, description of the breach. CMLA and CBA have breached the efficiently, honestly and fairly obligation, which is an AFSL licence condition, and the matter is reportable to ASIC under section 912D of the Corporations Act.
Yes.
Why did CBA acknowledge a breach of the efficiently, honestly and fairly obligation in relation to LPP, but not in relation to CCP?
I think at this point it was fairly clear that there was a breach. When we were talking about CCP earlier, I mentioned there was a debate. Wrong conclusion, but there was a debate that because customers were eligible for a portion of the benefits on the bundled product, it wasn't as cut and dry that there was a breach. I think with hindsight, we've all agreed that there should have been a breach reported back then.
Yes, I see. All right, can I show you an additional document from around this time, Mr Van Horen, which is CBA 0001 0033 0095. This is an internal CBA email chain, starting with an email from Helen Troop to Ian Narev
Yes.
and Michelle Keed
Yes.
on the 4th of October 2017, relating to a flash report process. Can you explain
Yes.
what that is?
A flash report is the means by which we as leaders in the business escalate to the CEO's office any material issue that could have a significant impact on the group, whether it's customers or reputation or financial loss,
So
or even
this-
avoided loss.
So this is an elevation to the CEO.
It's an escalation.
An escalation
Yes.
of this issue to the CEO on the 4th of October
It's a
last year.
semi-formal escalation. There could well have been conversations occurring between prior to this email being sent.
And Helen Troop, who was, can you remind me again who Helen Troop was at CommInsure?
Helen is the managing director of CommInsure.
The Managing Director of CommInsure says to Mr Narev and Michelle Keed, I believe the current flash report process is to send to Michelle to be flagged with you at the next appropriate forum or meeting. Given Annabelle is on leave, she asked me to inform you in her absence. The current environment in regard to potential high reputational issues or incidents and CCI in general. And 3, ASIC's tone in a call last Friday, I thought it best to send to you both concurrently. So those are the matters that have led Helen Troop to escalate this to the CEO on the 4th of October 2017.
Yes.
I tender that email chain, Commissioner.
Exhibit 1.105, CBA 0001 0033 0095, email Troop to Narev and associated emails for October 17.
And on the same date, the 4th of October 2017, CBA produced a slide presentation dealing with these matters, which is CBA 0001 0025 1047. Have you seen this document before, Mr
Yeah.
Van Horen?
Yes.
Apollo 2, can you explain what
It's
that is?
Apollo 2, not Apollo 11. There we are.
I thought the same when I saw it. What it is Apollo was the internal name used to refer to the CCP remediation, and then Apollo 2 refers to the LPP remediation.
The LPP remediation, thank you. And this document contains a number of what appear to be PowerPoint slides. If I take you to 1056. Do you agree that, is that what this is, a PowerPoint slide or some sort of internal document?
It's an internal document,
Yes,
yes.
okay. So this is a page within that internal document about Apollo 2 that shows that as at 4 October last year, CBA's scoping on remediation indicated that the breach notification would cover, do you see at the bottom, 115,000 customers?
Well, you can see this page is broken down into two categories. The first is, you'd recognise the total where it says total unemployed.
Mm-hmm.
The first is the category mainly students, but also including unemployed home duties and so on.
Yes.
In other words, similar to the CCP categories that we'd previously addressed.
Yes.
18,000 odd customers, $3 odd million of potential refunds.
Yes.
And if I fast forward very quickly, those are the numbers that found their way into our 29th of January submission, which you may want
Yes.
to come back to. And so at that stage, we had started to analyse, work was underway to analyse the different customer categories that could potentially be in scope for remediation. The second half of the page, the biggest category there is around part-time workers,
Yes.
which is a category different to CCP. So these are people where we had data saying that they were part-time, not full-time. Again, are they working less or more than 20 hours was the obvious question.
So at this point, there's potentially 115,000 consumers in the remediation scope with potential refunds of $10.89 million.
Yes.
And your evidence is that subsequent to the creation of this document, CBA has decided that there's less customers that are affected by this and a smaller amount of remediation necessary?
Yeah, so I think the same approach that applied in CCP was adopted here. In the end, I think we've got to the right place. However, the process to get there involved a few iterations, shall I say.
I tendered this document, Commissioner.
Have we got a date for it, Ms Orr?
Yes, there's a date on the front page, Commissioner, 4 October 2017.
Thank you. Exhibit 1.106, CBA 0001 0025 1047, Apollo 2, 4/10/17.
As at the date of your 9 March statement, Mr Van Horen, you said that the LPP remediation program had not commenced.
That's correct. So we're busy going through the customer groups. We still need to settle those with ASIC. We also, as with CCP, we agreed the letters that were sent to customers. ASIC was very particular about the wording of those letters. So that is still to happen.
So it's still the case that remediation hasn't commenced?
That's right.
And you're proposing to use call to action letters again, which require the consumers who receive the letter to take some action in response?
We propose a broadly similar approach to CCP. So there'll be a category where it's an automatic refund, so the first half of that page, and others where customers will need to let us know that they were not eligible for the benefits at the time, in which case they will get the refund.
Mm-hmm.
There are slight differences in the quantum of the refund between the CCP one and this one,
Yes.
which I can explain if it's helpful, but the same approach overall will apply.
And you acknowledge in your 9 March witness statement that CBA's identification of both the existence and scale of the LPP problem was too slow?
Yes, I do.
And at the time of that statement, your estimate was that 139,000 customers might be affected by the LPP issue?
Yes, based on that large group of part-timers, and it really depends on what the feedback is from those customers as to who was eligible or not.
Now, this is where the fact that you signed statements and replaced them with subsequent signed statements becomes tricky, Mr Van Horen, because the estimate that you originally gave of 139,000 customers affected was in your 2 March original signed statement, and it's repeated in your 9 March signed statement.
Yes.
But in between those two, you provided a supplementary statement dated the 5th of March 2018.
Yes.
And in that supplementary statement, you told the Commission that CBA had determined that the number of customers or potentially ineligible to receive certain benefits was, in your words, significantly greater, and CBA would now be communicating with approximately 140,000
Correct.
customers.
Yeah.
Now, is that connected with the 139,000 customers that we've seen references to in the earlier statement, or is it additional?
No, same thing. So
Yes.
approximately 140, given that there's still a lot of work to do to land on the exact number, we said approximately 140. You didn't want to pretend there's high level of precision on that number at this stage.
Now, at the time that CBA made its first submission to this commission on the 29th of January 2018, there was disclosure to the commission about the LPP issue.
That's right.
Is that right? And if I could have brought up RCD 0001 0003 0004. That's the submission from the 29th of January, and if we could have on the screen pages 0030 and 31. We see there the information provided to the Commission about CCP and LPP in this document.
Yes.
Now, at 134, paragraph 134, we see a reference to LPP and the investigation work having begun to refund customers in a manner consistent with the CCP customers.
The investigation work has begun, not the refund. Yes.
Yes.
Yeah.
ASIC was notified on 4 October 2017 and the investigation work has begun to refund
Yes.
customers in a manner consistent with the CCP customers.
Yes.
And then if we go to 137, we see that as at the date of this submission on the 29th of January 2018, CBA tells the Commission for LPP, while the investigation is at an early stage, we have so far identified approximately 20,000 customers eligible for refunds estimated at approximately $3.4 million.
Yes.
But it's true, isn't it, that by the date of this submission, CBA knew that the potential number of customers affected by the LPP issue was much higher.
Yeah, so if you recall the slide we looked at just a few minutes ago, which had those two parts to the page, what this document referred to was the roughly 20,000, I think it was
Yep.
18,000 customers that we were fairly certain would require remediation. What was not included at this stage was the largely the part-time category, which is what we have subsequently included.
Yes, so as we saw with your original communication to ASIC about the CCP issue, CBA elected to tell this Commission about a part of the problem, not the full extent of the potential problem.
I think the facts speak for themselves, and that's the conclusion. I have to add that is definitely not, there was certainly not, to my knowledge, any intent to suggest or conceal anything, which is why we've gone to great lengths in our supplementary statements to provide the additional information.
Commissioner, could I tender the relevant paragraphs of this document, which, if we can pan back from the 137, I'll be able to identify as paragraphs 131 to 138 of this document.
Exhibit 1.107 will be paragraphs 131 to 138 of CBA Group response 29 January 18 RCD 0001 0003 0004 at 0030 to 31.
Mr Van Horen, on the 5th of March 2018, in your supplementary statement, you told the Commission that over the course of 2017, CBA had been considering how best to meet the protection needs of its customers, including a review of consumer credit insurance products, in parallel with considering how to design the next generation of insurance products. Do you see that in paragraph 2?
Yes.
And you then told the Commission in paragraph 3 that CBA had determined it will cease the sale of CPP.
Yes.
and that it would cease the sale of PLP, being the personal loan protection stream part of LPP.
Correct.
When was the determination made to cease the sale of CPP and PLP?
So the timing of those two were slightly different. As I said in the statement here, we'd been considering, well, if I rewind a lot, you could imagine there's been a lot of conversation over a long time about these products and their long-term role in meeting customer needs. The decision to stop selling CCP was made. There were a couple of key meetings and milestones, and I believe some of these documents have been produced. But there was a meeting with a number of executive general managers in CommInsure and the retail bank in January, at which the decision was made to, a recommendation was agreed upon with consensus of all those parties to terminate the sale of CCP. Date still some months down the track. The recommendation in that document was to review PLP, and part of the rationale, which is referenced here in the witness statement, part of the rationale was the deferred sales model that you referred to earlier, which had been agreed at an industry level to be implemented for CCP. Our view, and certainly my personal view, was the same logic applied to PLP, and therefore, if it was going to work for CCP, it needed to work for PLP as well. And so that was why we accelerated the decision to close PLP and to make the announcement prior to this Commission's hearings.
Could I show you a document from Monday, 5 March 2018, which is CBA 0508 0003 0203. That's an email chain within CBA, Mr. Van Horen.
Yes.
An email chain from Monday the 5th of March.
Yep.
And we said that an internal request to cease the sale of CommInsure's personal loan protection and credit card plus products was made at 5:41 p.m. on the 5th of March.
Yes.
Approval is sought prior to the issue of any media statements by the CBA Group. Currently, this is scheduled for 12 p.m. tomorrow afternoon, the 6th of March.
Yes.
And in the email that follows that, we see that less than an hour later, at 6:33 p.m. on the 5th of March, Helen Troop, who you've referred to, approved the ceasing of CCP and PLP by 30 June 2018.
That's right.
I tender that document, Commissioner.
Exhibit 1.108, email Troop to Kerins and others, 5 March 18, CBA 0508 0003 0203.
And CBA did issue a media release after this decision was made.
Yes, we did.
It was released on the 7th of March.
Yes.
2 days after that email chain.
Yes.
Could I show you RCD 0021 0001 0262? We see there that the title of the media release is CBA to implement loan insurance refund program.
I see that, yeah.
And at page 263, we see there that the media release discusses both the loan insurance refund program and CBA's decision to end sales of its current credit card plus and personal loan protection products.
That's right.
And the media release quotes Matt Coman as saying that CBA has found it hard to achieve the right balance between simplicity and accessibility on the one hand and limiting the product to the right group of target customers on the other hand. See that in the second paragraph?
Yes.
And Mr. Coman is again quoted further down the page as saying that CBA has concerns that some customers who have been sold these products may not have been eligible to receive all of the employment-related benefits.
Yes.
And the media release records at the bottom there that CBA is going to proactively contact customers who could be affected and has set aside approximately $16 million for refunds, including interest, to an estimated 140,000 customers of the PLP and home loan protection products.
Yes.
I tender that document, Commissioner.
Exhibit 1.109, CBA Media Release, 7 March 18, RCD 0021 001 0262.
And your supplementary statement touches upon a number of similar issues to those that Mr Coleman spoke about in this media release.
Yeah.
And you told the Commission in your statement that there were 3 principal reasons which led to CBA's decision to cease selling CCP and PLP, and they were the scale of the LPP remediation, the likely regulatory change on the horizon, and the sale of CBA's life insurance business.
Yeah, if I can expand on those a little. I think at the heart of the challenge we have here, and it was referred to in that media statement where Matt Common was quoted, is what we've found difficult to do is get right this balance between having a simple and efficient way of providing protection insurance to our customers, because I do believe there's a real need there, and doing it in a way, on the other hand, that's safe and gets the right protections and processes in place. And that is the thing that we and many others have grappled with for a long time, is how you deliver what I do believe is a valid and a real customer need for protection in a way that's safe and delivering it to the right customers. And so that is one of the core challenges that we have grappled with here, as you can see.
So we've spoken about the first matter that you've touched on in your witness statement, which is the scale of the LPP remediation. I want to ask you some questions about the secondly impact of regulatory change. You deal with this in paragraph 5 of your statement, where you note that for several years consumer credit insurance products have been the subject of regulatory and internal review. And you refer to CBA having engaged with and supported ASIC and the industry's move to deferred sales for credit card insurance.
Yes.
Now, deferred sales means that there's going to be a 4-day period after a credit card is purchased before the credit card insurance product can be sold to the consumer.
Yeah.
But that's only through the assisted channels, the branch and the telephone, and doesn't apply to the digital channels.
It doesn't. What's been contemplated in digital channels is to have very clear separation between the customer acquiring the credit card, say, or the personal loan, and the insurance. And I think the problem trying to be addressed there is some customers might have a belief that taking out insurance is necessary in order to have their credit card approved, which is not the case, but those are some of the changes that we committed to make sure that it is clear for customers in digital channels.
And you refer in this paragraph of your statement to CBA's view that a similar deferred sales model is appropriate and likely to be implemented for personal loan insurance. This will have an impact on the sales process and will require significant re-engineering of and investment in our processes if we continue to sell the existing products.
Yeah, that's right. So I've been part of those conversations with ASIC and consumer groups and other insurers or banks, and we agreed middle of last year to move to deferred sales by 1 July this year for CCP. The conversation was always very focused on Credit Card Plus. My personal view, and I think others share this view, is that the same would apply to personal loan protection sooner or later, and therefore if we're going to do it, we may as well do it sooner.
And
so,
can I take you to an internal document to that view, which is CBA 0508 0006 0017. This is a memo that, if we could have the last page displayed on the screen at the same time. It's a memo written by you and Ms Troop on the 4th of March 2018.
yes.
And do we see there on 0019 at clause 3.11 a reference to the view that you've just expressed,
That's
which
right.
is that while PLP was not in scope for the deferred sales model change, you believe the same rationale will apply in due course.
Absolutely. I
Yes.
think the logic is entirely consistent for both.
Now, I'm going to come back to this document, but I'll ask you some other questions first. Could I tender this document, Commissioner?
It's Exhibit 1.110, Draft Memo re CCI, Troop and Van Horen, 4 March 18, CBA 0508 006 0017.
In your witness statement, Mr Van Horen, you don't refer to the ongoing profitability of these products, do you?
Not directly, but we do, if you look at paragraph 5, I did say in the last sentence that these new deferred sales approaches for the two products will have an impact on the sales process and will require significant re-engineering of an investment in our processes. And the reason that's relevant, and it is very relevant to the ultimate decision that we announced, is that it would be it does require a significant investment to change our sales processes, to introduce a deferred sales model for both. And our decision was based on the return we'd get on that investment, as opposed to starting afresh with AIA, which is really a big driver for why we've chosen the path that we've chosen here.
Well, it's the case, isn't it, Mr Van Horen, that CBA's view is that after these regulatory changes are brought in, the CCP product will no longer be economically viable.
Well, there's no question that the introduction of deferred sales will have an impact on the sales volumes and therefore revenues and the commercial equation.
And do you accept my proposition that CBA has taken the view that the result of regulatory changes will be to render the CCP product not economically viable?
I'm aware of work that's gone on in CommSure to assess the impact of that, and that has been the conclusion reached from that work.
Yes, and if I could just show you CBA 0508 0003 0014. If we could have the last page on the screen at the same time, you'll see, Mr Van Horen, that this is a Colonial Mutual document headed Life Product Strategy for Bank Channel Distribution. I'm sorry, we need the page before the attachment, which is 0016, dated 5 March 2018, written by Craig Harrison, General Manager of Life Product and Distribution at CommInsure, and Adrian Kearns, Head of Direct Insurance and Integration at CommInsure.
Yes.
And if we turn to 0015 in this document, we see at clause 3.3 that those two people conclude that changes to the Banking Code of Practice requiring a deferred sales model for CCP and required changes to digital distribution processes will have a material impact on the ability to effectively manufacture and distribute Credit Card Plus. Project costs associated with implementation, combined with reductions in expected sales, create a negative investment profile, leading to the recommendation that CCP is no longer economically viable in its current form and should be withdrawn from sale prior to the implementation of a deferred sales model. That is why you have made the decision to cease selling the CCP product, isn't it?
I think you cannot, yes, but you cannot ignore the fact that we have sold our product manufacturing business, CommInsure Life business, to AIA, who is a leading global insurer. And the simple choice we have is, do we invest in our existing legacy products with the improvements that we've made that we think they're compliant, but they're not world's best? Or do we invest in future capability that AIA will bring? And we've clearly chosen the latter.
Can I just explore some things about that? CommBank began to offer these products in about 2003, is that right?
Yes.
At the time CommBank began to offer these products, were other banks offering similar or the same kinds of product?
Long predates my involvement in the space, so I couldn't give you an exact start date for others, but I could tell you that certainly in recent years, other banks have offered similar types of products.
2003, CommBank then, by then had acquired CMLA, Colonial Mutual, had it not?
I believe it was around then. Don't know
June
exactly.
2000, it acquired CMLA, I think. Is that right?
I can't confirm that exactly.
3 years later, it began to offer, that is, the it in that sentence, CommBank began to offer these products to its customers
Yes,
at a point when CMLA was part of the group.
that's right.
It now ceases to offer these products at a point where CMLA has ceased to be part of the group. Is that right?
Yes.
Is it a
sorry.
reasonable conclusion that part of... Sorry, I did interrupt you. Do go back.
Bear in mind there's 3 products. So there's credit card, personal loan and home loan protection. It's 2 of the 3 that we are ceasing, and we are continuing with home loan protection.
It ceased, CommBank ceased sale of the 2 products after it had agreed to dispose of CMLA.
Yes.
The profit centre that was represented by sale of these products was no longer within the group. Is that right?
I should just clarify, it has not yet been sold.
No, I understand that.
It's all in process, and this hasn't been something we've done lightly or without discussing with AIA, because clearly they are, and they've signed a 20, or will be signing a long-term 20-year distribution agreement with CommBank. And so our premise is that the customer need remains, but the way we're going to meet that need is going to be very different with AIA.
Yes.
Before we leave this document, Mr Van Horen, I want to direct your attention to the part that deals with the economic viability of the personal loan protect product, the PLP product. And we see there that it's not required to have a deferred sales model at this time. However, it's considered a likely change in the future. This, coupled with other ongoing challenges, were expected to impact value and performance, which in time was expected to result in a similar economic outcome to CCP. Management were of the view that a withdrawal of PLP from sale was likely outcome in the near term. So the bottom line that I want to put to you, Mr Van Horen, is that CBA does not consider that either the CCP product or the PLP product would be economically viable after the anticipated regulatory changes, and that is the reason their sale has ceased.
It's not as binary as that. We face a choice in the near term. Do we invest quite a lot of money? I'm talking about several millions of dollars in both of these products. Do we invest that money in trying to get these 2 existing products into a future state, which is compliant with deferred sales and everything else that we need to do? Or do we invest those investment dollars rather in building something that will be quite different? Work has been underway in CommInsure for quite some time, many months, as I understand, around the thinking of what a future type of insurance product or products or suites could look like, and the sale to AIA has accelerated that. So it's one of many factors. Absolutely, there's a commercial reality that we face, but there's also a short-term decision that we face about what do we invest in, legacy products or something quite different.
I'll ask you some questions about that, but I'll tender this document first, Commissioner, if I have not already done that.
Exhibit 1.111, CMLA Life Product Strategy, document 5 March. Life Product Strategy bank channel distribution. 5 March 18, CBA 0508 0003 0014.
I should ask, Commissioner, if the Commission would permit me to finish the examination of this witness, which I anticipate will take another 10 to 15 minutes.
Yes.
Thank you.
Yes.
Now, you spoke just then, Mr Van Horen, of the significant investment that would need to be made in these products. And I want to suggest to you that there are reasons that have been discussed internally at CBA for not making those investments. And one of them is continued regulatory risk associated with these products. Can I take you back to CBA 0508 0006 0017? This is you'll recall this is the draft memo that you did with Ms Troop
Yes.
on the 4th of March 2018. And could I direct your attention to 3.13.1? It is possible ASIC may reopen previously settled remediation activities or add new requirements. For example, ASIC has questioned whether life insurance should have been sold to customers younger than 25. It's also possible that ASIC may expand the scope of previous remediation exercises, requiring us to remediate more customer groups or adopt a different remediation approach. For example, we may need to expand the CCP remediation to include part-time employed customers. This group was not remediated previously because they were eligible for a substantial part of the product's benefit, and our data on hours worked is very poor. Now, do you accept that these regulatory problems that you and Ms Troop referred to in this document have also influenced the
Absolutely.
decision? And CBA has also been concerned about the public scrutiny associated with the continuing sale of CCP and LPP?
I think probably more, yes, but the bigger factor has been around consumer groups. We've been engaging with consumer groups for quite a while now around CCP, both as part of industry ABA forums as well as directly. And it's been a loud and continuous, as this Commission has heard, source of unhappiness from those consumer groups as well.
Since at least the 28th of February this year, you and Mr Coleman have been discussing how to deal with the public scrutiny of the CCP product.
Do you mean in relation to this Commission or more generally?
Both.
We've certainly had discussion about how to manage everything that's described in my witness statement here. We've been at pains to say we will not be managing the Royal Commission, just for with abundance of clarity. We've got zero capacity to manage the Royal Commission. However, we can manage our communication very carefully, as we've attempted to do, in letting the Commission know in advance of us making any public announcements of what we're doing.
Could I ask you to look at CBA 0508 0006 0014? And if we could start at page 0015 of this document. This is an email that you sent to Mr Coleman on the 28th of February this year.
That's right.
A heads up, because things are moving fairly quickly on this front, and I want to make sure you're aware and comfortable because these are quite material. And the first thing you refer to there is public statement, currently targeting Friday, working with Andrew Hall and team on the announcement and timing. The first draft statement is not ready to share with you. We think the core messages will be along the lines of, we've been working to improve CCI for a while, have remediated CCP, have moved on to PLP and HLP, will be remediating customers in a similar way, have decided to shut PLP and HLP for new business from 30 April or before 30 June, excited about building a new customer-centric propositions with AIA, who also have vitality in their stable. We'll get a draft to you before it goes out. A draft of what, Mr Van Horen?
Of the media release.
Of a media release.
I might just add, I made an error in that email, so just for the record, where it says in the third last line, have decided to shut PLP and HLP. It should have said PLP and CCP for new business.
CCP,
Yeah.
I see. So this is the media release. These are the themes that you want the media release to cover. Which media release are we talking about here?
The one that went out a few days after this.
The one that
you
went out
referred
on,
to earlier.
on the 7th of March.
Forget the exact date, but it was
Yes.
thereabouts, yeah.
There's then a reference to regulators, and below that a reference to this Royal Commission.
Yep.
Royal Commission, given this is relevant to the CCI witness statement that went in Sunday night, we will call the Royal Commission and explain to them what we are announcing so there are no surprises in the witness doc. It's one to manage carefully because there is risk we get them offside. We will work with Clayton Utz and external counsel if required to manage this. What were you referring to there, Mr Van Horen?
I think exactly what I just said. We didn't want to spring any surprises on the Royal Commission. We thought if we're going to communicate, we'd much rather proactively communicate with our customers than have a message come out reported by media where we're not controlling that message at all. So I think the choice we faced was, do we make an announcement proactively to customers saying we will stop selling these products from a certain date, or does that message come out in some other way that's a little less clear?
You had a response from Mr Coman to your email on the same day.
Yes.
Which will assist if we have both 0014 and 0015 on the screen together. Mr Coman says, thanks for the update. A few key points. There should be no public statement until I have reviewed it and I have cleared it through IN and the chair. IN?
Ian Narev.
Thank you. I am still learning, but it may be something the board would like to be briefed on. We'll find out. To point 1, can you please prepare a short paper outlining the background and rationale for this change? Which change did you understand Mr Coman to be referring to there?
Well, all the ones that I referred to earlier, so in particular the decision to announce the closure of the two products.
Yes.
Yeah.
Point 3, good to inform regulators. I think we should also brief some of the consumer groups, e.g. Fiona Guthrie and Gerard Brody. All of this indicates this is more likely to be an announcement next week. I want it to be very much tied to the AIA acquisition. What did you understand Mr Coman to mean by that, Mr Van Horen?
What I understood that to mean was to, as you saw in my outline of what the core messages were, the final key message there was around the sale of Common Life business to AIA, and that being a key trigger for us to say, well, let's stop selling the existing products and let's build something new with AIA.
But it wasn't, in fact, the reason for the cessation of the sale of these products, was it?
As I said, there were a number of reasons. All of them came together, and I think it was absolutely a convergence of those factors.
Mr Coman finally says to you, we should also debate whether no announcement is better, but it just comes out. What did you understand him to mean by that?
I think at that stage he wasn't clear that, we weren't clear collectively as to how the witness statements would be made public, if and when. I think the feedback we'd had was that they would potentially be made public, and therefore you could imagine if a customer read my main witness statement, as we called it earlier, if that was reported in the media before we'd even told customers about it, that would have been quite an unsatisfactory outcome, which is why we wanted to proactively let customers know first.
You respond to Mr Coman's email later that night at 9:58 p.m. that night, and you provide him with a paper on the CCI background and rationale. You tell Mr Coman that Helen Troop has provided input.
That's right.
I have kept it draft and not labelled it as an exco or board paper until that's confirmed, and note this may be produced to the Royal Commission once finalised. Now, is that a reference to the document that we've gone to a couple of times now that was
Yes.
written by you and Ms Troop
That's
that
the
had
one.
the draft in
Yeah.
the title?
That's right.
And you also update that paper on Sunday the 4th of March to reflect recent changes, including Commission's announcement last week that they are making submissions public.
That's right. So that paragraph you referred to earlier, 3.13.1, I think it was, is the one that, or one of the parts of the paper that I updated.
Thank you. I tender that email chain, Commissioner.
Exhibit 1.112, emails between Van Horen and Coman, 28 February 18, CBA 0508 0006 0014.
Two final topics for you, Mr Van Horen. The first is the decision to continue selling the HLP product. You say in your witness statement at paragraph 9 that this was because the customer value proposition for CCP and PLP products was different than that for the HLP product. And what I want to suggest to you is that CBA has made the decision to keep selling the HLP product because it has provided the biggest stream of premiums to CBA.
The primary reason we've made the distinction between the products is the nature of the sales process, and the customer need that is being protected is very different. So if you think in simple terms, when you have HLP with a home loan, you're protecting basically the customer's biggest asset. The nature of the sales process is also quite different with HLP because unlike a credit card or a personal loan, which are generally either bought online on the spot or sold in an assisted channel pretty quickly, it's a very quick decision that the customer makes, very simple need. A home loan is a much more extended process. The application takes longer, it takes 4 to 6 weeks to settle a home loan typically, and therefore the concerns that we've had, that ASIC, that consumer groups have had, has been much lower for home loan protection than for the other two products.
Do you accept, Mr Van Horen, that HLP provides the biggest stream of premiums to CBA when compared with the Credit Card Plus and the PLP product?
Yeah, I would have to check the exact numbers. I don't manage that P&L, but I know that they're material. It's not to say that PLP is immaterial, though.
Well, I'll just show you quickly a reference in the document
Sure.
that you created with Helen Troop, CBA 0508 0006 0017. On the final page of that document, which is 0020. I'll just give that doc ID number again, CBA 0508 0006 0017. And if we could have 0020 on the screen as well.
0006 or 006?
0006. My apologies if I got that wrong, I'm sorry. I wanted to show you the final page, Mr Van Horen, 0020.
Had a little table, yep.
Yes, do we see a portfolio snapshot there which
Yep.
shows the premiums received in 2017 from each of these insurance products?
Correct.
So the total premiums across all the products we see there is 151.2 million,
That's right.
and the HLP product was the greatest contributor to that at 62.99 million.
Correct, yep.
And CBA documents show us that that the HLP product contributes 62% of the embedded value of new business across these products. Would you agree with that?
That could well be the case. I'm aware that some documents have referred to that. The point I made was that PLP and CCP are not immaterial and not irrelevant alongside HLP.
Final topic, Mr Van Horen. You heard the evidence of Ms Irene Savidis
Yep.
today. You've read the statement that she's
Yes.
made to the Royal Commission, and you would have heard from Ms Savidis' evidence this morning that she explained that she received a card from CommInsure in the mail recently.
Yes, I did.
Were you aware that this card was sent to Ms. Savitas?
Only long after the fact.
Do you know who wrote the card?
I believe it's a staff member in the Commonshaw business who handles. So the context for that, Commonshaw have a team of people who try and bring the personal touch to customers. Clearly, in this case, it was not informed by the right data, and so the "thank you for your loyalty" part of that card was inappropriate. But it was absolutely a well-intentioned effort to bring a personal touch to customer interaction.
Does CBA generally send handwritten cards to customers who are entitled to a refund of premiums that they've paid?
Not to my knowledge. Very unusual to have handwritten cards.
Does CBA just send cards of that nature to people who are going to be giving evidence in the Royal Commission?
No, and if that was the trigger for sending the card, somebody clearly would have scrutinised.
Well, CBA's been on notice since the 19th of February this year that Ms. Savitas was going to give evidence to the Royal Commission.
Yeah, I believe so. Having investigated how did that card come about and talking with the Commonshaw folks, there was an interaction recorded in our customer relationship management system, and without looking at the specifics of what that interaction was, the staff member wrote that card. It triggered a work item for that staff member, and she wrote that card. I think well-intentioned, but misplaced.
No further questions, Commissioner.
Is there any party other than CBA who seeks leave to cross-examine? Mr. Sherry?
No questions, Your Honour.
Very well. Thank you, Mr. Van Horen. You may stand down. I think we are to see you more than once again, are we not?
You will.
Yes. Thank you very much.
Thank you to the Commissioner for sitting on late today. That concludes the case study in relation to add-on insurance. We'll move to a further case study tomorrow morning.
At 9:45 a.m. the forced march continues. 9:45.
Briefly touch on some background to these case studies, including the products and systems which they concern. First, overdrafts. An overdraft is, to put it simply, an arrangement that allows a person to withdraw more funds than they have in their account. ASIC's Smart Money fact sheet overdrafts identifies two types of overdraft, one being an arranged overdraft and the other an unarranged overdraft. As described by ASIC, an arranged overdraft is a credit facility connected to a bank, building society or credit account which a person applies for or which may be given to a person as part of that account. In contrast, ASIC says that an accidental or unarranged overdraft occurs if a person makes a payment but there are insufficient funds in that person's bank account to cover it. In that circumstance, where the person's bank or building society honours the payment anyway, this creates a debt in the nature of an unarranged overdraft. While financial services entities have different policies in relation to unarranged overdrafts, many cheque or savings accounts permit some form of unarranged overdrafts to take place. As to the prevalence of this credit facility in Australian commerce, the Reserve Bank of Australia records data in relation to what they describe as revolving lending, which refers to lending facilities that permit a customer to draw on as much of a pre-approved amount of credit as is required at a given point in time. In January 2018, the RBA found that there was $58.9 billion in revolving credit provided to households. The majority of that, approximately $51.6 billion, relates to credit cards, another topic which awaits the Commission's consideration later this week. While the precise figure cannot be ascertained from the figures provided by the RBA, overdraft facilities granted to personal banking customers account for some of the remaining $7.3 billion that was on loan as at January 2018 to Australian households. Second, I refer to processing errors. The other topic we will be looking at the other topic that we will be looking at in this next phase of the hearings being account administration and processing errors by financial services entities when providing consumer credit products. As noted in the opening address of Senior Counsel Assisting last week, as a result of work done by ASIC since July 2010, approximately $239 million has been repaid to almost 540,000 customers who have been affected by account administration and processing errors in connection with home loans. This remediation has been paid by financial services entities such as ANZ, the Commonwealth Bank of Australia and Bank West, National Australia Bank, Westpac and the Bank of Queensland. The remediation paid demonstrates that processing errors occur across a variety of credit products. They occur predominantly by reason of the application of automated processes, but human errors, left unchecked, often underlie them. And in their application, for example, to the calculations of interest payable, they can have a very significant effect on Australians' day-to-day lives. That is, Commissioner, we will explore the fact that such errors throw into stark relief the right of all Australians to be treated honestly and fairly in their dealings with banking and financial services providers. I now turn to the case studies about which you will shortly be hearing. The first case study, relating to CBA, concerns a programming error in the automated serviceability calculator used by CBA to assess certain applications for personal overdrafts. In CBA's first submission to the Commission, it told the Commission that CBA had paid 4 infringement notices issued by ASIC in relation to breaches of responsible lending laws when providing personal overdraft facilities. These totalled $180,000. CBA had identified a programming error in the automated serviceability calculator used to assess certain applications for personal overdrafts. As a result of that error, CBA failed to take into consideration the declared housing and living expenses of some customers between July 2011 and September 2015. According to an ASIC media release, CBA told ASIC that the error resulted in 9,577 customers being granted an overdraft when their application should have been declined by the bank, and 1,152 customers being granted a higher overdraft limit than that for which they were eligible. In CBA's second submission to the Commission, CBA advised the Commission that CBA had remediated 9,161 customers, writing off overdraft balances, reducing limits where required and waiving outstanding amounts to a total of approximately $2.5 million. The impacted customers who did not require mediation had primarily closed their accounts prior to the remediation. An example of the approach that CBA took to remediation, where customers were actively utilising the overdraft facility, was that CBA would send a letter, an email to the customer, providing 34 days notice of the overdraft limit removal or reduction. CBA would then write off the outstanding balance and remove or reduce the limit at the end of the notice period. The remediation methodology was agreed with ASIC and overseen by Ernst & Young. On 14 September of 2016, ASIC issued a media release announcing the imposition of penalties on CBA in respect of this conduct. The media release stated, and I quote, "ASIC was concerned that this conduct breached responsible lending laws and that affected customers would have been unable to comply or could only comply with substantial hardship with their obligation to repay their personal overdraft on demand. This study will raise issues with respect to responsible lending in the overdraft context, and in relation to the effect of automated processes on responsible lending. You will hear evidence from Mr. Clive van Horen, who gave evidence before you, Commissioner, yesterday. Mr. van Horen, as the Commission heard, is the Executive General Manager, Retail Products, and overdraft products fall within his area of responsibility. The second case study will be an ANZ case study concerning ANZ's assured overdraft facility and breaches of the National Credit Act in connection with that facility. In its submissions to the Commission, ANZ acknowledged that in 2014, ASIC commenced an investigation in respect of the ANZ assured overdraft facility. Between November 2014 and January 2015, ANZ had issued a series of mail-outs to a group of existing customers holding transaction accounts. The mail-outs offered customers an overdraft facility with limits of $500 or $1,000. In February 2016, ASIC issued 5 infringement notices totalling $212,500 for alleged failures to comply with the requirements to make inquiries about the maximum credit limit required by the customer in respect of pre-approved offers. ANZ paid those amounts. ANZ also said that it ceased making ANZ assured pre-approved offers at that time. ASIC issued a media release announcing the imposition of penalties on ANZ on 7 March 2016. The media release stated, "These failures by ANZ were in breach of its obligation to make reasonable inquiries about the credit limit a customer requires. A protection aimed at ensuring that consumers can select the credit limit that meets their needs, particularly where they may need a lower credit limit than what might be on offer." Again, this case study will raise issues with respect to responsible lending. The Commission will hear evidence from Ms. Hiang Forbes, who was the product manager of assured and overdrafts in personal loans and overdrafts at the relevant time that these unsolicited offers were made. The third case study in this unit again relates to ANZ, and it relates to account administration or processing errors. In ANZ's submissions to the Commission, ANZ acknowledged that in the period from 2003 until July 2013, certain break-free home loan customers were charged an interest rate higher than they should have been according to the relevant terms and conditions. In addition, some offset accounts were not properly linked to home loans, resulting in customers being charged excess interest. These matters primarily arose because of limited system controls to ensure the correct package interest discounts were applied, a disaggregated process for implementing offset linkages, and a lack of oversight and detection controls. A program that you will hear about was designed and implemented to remediate the errors. It was known as the Mortgage Break-Free Offset Remediation Program. That program identified approximately 400,000 affected accounts and refunded customers approximately $69.3 million. This comprised reimbursements to customers of $61.9 million in interest in respect of their home loans and $7.4 million in compensation, to recognise that the customers had not received the interest rate discount from the break-free package or the benefit of linking their offset account to their loan. The average payment per customer in respect of these issues was approximately $300. ANZ informed ASIC of this matter on the 17th of June 2010 and provided updates in relation to its further investigation and in relation to remediation. The program was completed in April 2014. ANZ has told the Commission that as a result of the mortgage break-free offset remediation program, ANZ has made a number of process and control enhancements in respect of both the break-free package and the offset account linkages. The Commission has been told that ANZ performed forensic data analytics across its home loans portfolio to compare customer contracts to the operation of core systems. ANZ also acknowledged the existence of a number of other processing error events in ANZ's provision of home loan products. Those 4 further issues will be addressed. The first being, as part of an ongoing review in July 2017, ANZ identified certain further issues which had some similarities to those that I've already explained were the subject of the remediation program. They will be explored. Second, as part of a broader review of other product processes, ANZ's commercial lending business also looked at offset linking processes. That review also identified that those processes did not always work as intended, and as a consequence, that there were linkage errors in relation to commercial lending offset products. The recurrence of the break-free and offset issues and the additional offset linkage issues identified by ANZ's commercial lending review were notified to ASIC on the 5th of October of last year. ANZ continues to update ASIC on its progress in relation to these matters. The remediation program began in October of last year and is expected to be completed later this year. ANZ estimates that it will be required to refund around $4.3 million in overcharge fees and interest with additional compensation. Third, ANZ also acknowledged that between 14 December 2012 and February 2016, 4,800 offset accounts had not been linked to an eligible retail home loan. ANZ reimbursed customers to a total of approximately $4 million in relation to that issue. Fourth, ANZ acknowledged that between June and December 2016, certain customers did not receive the correct interest rate margin discount on their home loan. Approximately 2,300 customers were affected, and ANZ is currently investigating approximately 24,000 further customer home loans. It expects that the majority of these accounts were not subject to the error. ANZ acknowledged that it had reimbursed and compensated customers to an approximate total of $980,000 to date. The Commission will hear evidence from Ms Sarah Stubbings, the head of loan product for ANZ in Australia. Her evidence will consider this period of time over which these errors have occurred that have been the subject of variously identification, analysis and remediation. It bears emphasis that this case study, which involves a number of distinct but related errors over a very significant period of time, will provide the Commission with a lens through which to consider a number of questions relating to process errors, including the adequacy of ANZ's processes to detect and prevent such errors, and the effect of technology on the ability of banks to deliver honest and fair services to their customers, and the adequacy of remediation to their customers. Commissioner, that concludes my short opening in relation to the topics.
Mr Donnelly.
And it falls now, perhaps for my learned friend Mr Sherry, to call back to the witness box Mr Van Horen. Thank you, Commissioner.
Is that right, Mr Sherry?
Mr Van Horen, could you?
Mr Van Horen, having been sworn yesterday, there's no occasion to re-swear you, and we've had your personal details taken. Thank you. Do sit down.
Mr Van Horen, one of the statements you made was in relation to personal overdrafts.
That's right.
And that's dated the 9th of March.
Correct.
And the reference is CBA 9000 0002 0001.
That's
Do you
right.
have a copy of that with you, sir?
Yes, I do.
Are there any corrections to be made to that statement?
None.
Are the contents true and correct?
They are.
Tender that statement, Commissioner.
Exhibit 1.113, statement, Mr Van Horen, 9 March 18, CBA 9000 0002 0001.
Thank you, Commissioner.
Yes. Yes, Mr Dinelli.
Thank you, Commissioner. Mr Van Horen, my name is Albert Dinelli and I'm one of the counsel assisting the Royal Commission.
Morning.
You've given evidence to this Commission that your present role at CBA is the Executive General Manager Retail Products, is that correct?
That's right.
And as I understand it, you've held that role since May 2016.
Correct.
And before that you held various other roles within CBA.
That's right.
Now, I'm going to ask you some questions today, or this morning, relating to personal overdrafts. And that, as I understand it, is part of your role, an area of responsibility within the bank.
It is, yep.
You've explained in your statement, which has just been tendered, what a personal overdraft is. Can you assist the Commission perhaps by explaining in your words the nature of a personal overdraft?
Well, a personal overdraft is a credit facility that's linked to a customer's day-to-day transaction account. And so it's a facility that allows a customer to go into negative balance, essentially, up to an agreed or down to an agreed limit. So if your limit in your overdraft is, for example, $1,000, then the customer is able to spend into debit by up to $1,000.
I see.
It incurs interest at an agreed interest rate.
And
Sorry, Mr Van Horen, the last part of your sentence I missed.
The overdraft incurs interest
Yes.
at a published interest rate.
At a published interest
Yep.
rate. Thank you.
what is that interest rate?
It's 14.9%.
And that's recently been reduced, has it not, by CBA?
I'm not sure it's been reduced a lot. It certainly has changed, and it's a rate that moves up and down over time. It hasn't been reduced in recent weeks, though.
In February 2016, as part of the consideration of the issue that we're going to speak about this morning, the interest rate as at that time was 16.6%, wasn't it?
Wouldn't disagree with that.
And in fact, as part of that, there was a new pricing structure whereby the interest rate dropped to 13.59%, and there were some other adjustments in relation to the fees.
Yeah, as I say, it's a product that it's not static, that the rates do change over time for various different reasons.
Now, I'm going to refer in my questions to what I'll describe as the relevant period, and that relevant period is July 2011 to September 2015, being when CBA offered that product. Now, maybe to understand the significance of that timeline, can I take you to CBA 0509 001 0022. Now, this is an exhibit to your statement, and you will have seen this, of course, being dated February 2016.
That's right.
What was the purpose of preparing this update?
It was an internal update prepared by the team that manages the overdraft product, covering a range of topics, and as you can see on the agenda page, it covered a number of areas, including remediation, marketing activity, enhancements and improvements we're making to the product.
That's on 0023, which perhaps, for the assistance of the Commissioner will go to. I see. And I referred previously, and I might take you briefly to 0034. And it's there in relation to pricing that there's a reference to the reduction of the interest rate and and some changes to fees.
Yes.
And then if I can take you to 0026, which was the initial purpose of going to this document, if I may. Now, I asked you about the relevant period. The relevant period, as I indicated, Mr Van Horen, is from July 2011 through to September 2015. And you'll see there that there were 120,000 overdrafts on the books at CBA in July 2011, is that right?
Yes.
And what does it mean at that same time where it says pods on CommC?
Pods, personal overdrafts. CommC is our front-end system. It's a customer relationship management system, to use some of the jargon. In other words, it's the front-end system that houses all the information about the customer. It's a fairly comprehensive front-end system because it not only has information about customers, but it's also the way in which new products are originated in assisted channels, being branch or on the telephone. So think of it as the core front-end system that a lot of different components are integrated into.
And does that enable some automated processes to be done by the bank?
It can. It doesn't follow, but in this case, I think the relevance of July 2011 was when we commenced automated decisioning for pods, meaning that, broadly speaking, you've got two ways you could originate or make a credit decision: a very manual process, which you might think of as what happened 20 or 30 years ago, where a human being would have looked at a whole lot of information and make a judgment decision as to what the appropriate credit limit was, or a more current approach would be using whatever data and automated tools are available and to serve up a credit decision through automated processes. I might add that many of those automated processes have a lot of manual checks and balances as well.
Is it fair to say, however, that during the relevant period, that is from July 2011, it was almost entirely an automated system?
Yeah,
for the
it was a very heavily automated system. As I say, there are manual controls, which we can come back to later, but yes, it was an automated decisioning system.
And I will come back to that. Now, in June 2012, it indicates that there's 80% year-on-year growth.
Yes.
And that in June 2012, there were 228,000 overdrafts on the books.
Yes.
That is quite a jump in the period of 12 months.
Correct. Off a low base, so obviously a lot depends on what the denominator is, but it was growth off a very low base.
And in fact, by July 2014, which I accept is a couple of years further on, it's then 550,000 overdrafts.
That's right.
And part of that growth in overdrafts was because CBA, as part of its marketing, etc., was advertising overdrafts to its customers.
Sure, we were advertising.
And people were making applications. There's a distinction in your statement between what you call short-form applications and long-form applications.
Yes.
What's the difference between those two?
A long form is what you might think of as a traditional credit application, where a customer supplies, all the information as part of the application: income, expenses, assets and liabilities, and so on. So that's what we would call a long form application, because it's, as the name suggests, there's very detailed information on a number of aspects. Short form applications in our language refers to situations where, for example, it is already a CBA customer. They may have other credit products with us. They may have their transaction account, their day-to-day bank account with us, and therefore we have a lot of information available to us. And so an example of how short form differs from a long form application would be around income, because if the customer has their salary being credited to an account that they have with the Commonwealth Bank, then we can determine or estimate what their income is. And as part of the short form application, instead of asking the customer to provide pay slips or bank statements, you would expect them to say, well, hang on, you should know that already because I bank with you. What we do is we serve up and we say, well, based on our information, your income is X. Please confirm if this is right or wrong. If it's wrong, then they would follow up with further.
So you're able in that regard you dealt with income, but you're able in that regard to ascertain from the customer's bank account the amounts that are deposited in it, and if they are deposited on a regular basis from a particular entity.
Yes, it's not a perfect science, because you'd appreciate that people's income can take many different forms. For some people, it's very clear and regular, and also the descriptor that appears in the transaction is sufficiently accurate and detailed that we can identify that it is a salary.
And like what? Sorry, go on, Mr. Van Horen.
But it doesn't always apply. So there would be many customers of ours where we do not know what their regular income is, and we're unable to follow a short form path.
And likewise, you can see if there's particular expenses that would come out on a regular basis as well.
Yes, that's a much more complicated area. Happy to explain that a little if it's helpful.
No,
We'll get to that later.
We'll come to that in due
Yep.
course. So you've spoken about the short form application, and that's important by way of context. But I'm focused here in relation to the personal overdrafts on the long form applications that that are the subject of your statement. And as part of that more detailed analysis of their expenses, you would ask people what their living expenses were
That's right.
and any rental expenses that they had.
Yes. So fixed, if
And-
you think of it in two categories, fixed and discretionary. Fixed would be rent or mortgage repayments or other loan repayments, and discretionary would be your other living expenses.
And it's important to have that figure, dealing with them in turn, but it's important to have the rental figure because that, of course, allows you to assess whether it's reasonable or not to offer an overdraft to someone.
Correct. It's relevant to the suitability assessment, the
you.
serviceability assessment.
In July 2014, there's a reference to a calc notice. Can you inform the Commission what that is, or what that's a reference to?
CALC is the Consumer Action Law Centre, consumer advocacy group based here in Melbourne, and they raised issues around the way that the short form was being marketed, and that led to a series of quite an extended process with ASIC of assessing whether our short form application process was meeting responsible lending requirements.
And then during this stage, during this process, if I can call it that, or since the first calc notice, there was also the identification of an error in relation to the long form application, wasn't there?
Yeah, that's right. So what was happening was, whilst the work was underway on the short form side, a new leader took responsibility for the personal lending business. Personal lending includes overdrafts. And what he did was commenced quite a comprehensive review of the full portfolio, not just focused on the short form product, but on all aspects of the portfolio. And so we call it a deep dive to understand, the state of health of the portfolio. And at the same time, we were upgrading our decisioning system or tool. Stop me if this is too much detail, but essentially from a system called Transact to Power Curve Optimization, which is PCO. So that is the decisioning tool that takes all the inputs and then produces a credit decision, approve, decline, refer. And as part of that implementation of that change, we ran the old and the new system in parallel, and we saw that it came up with a different answer.
And what, if I could stop you there, and it became apparent, as I understand, on the 1st of September, and let's leave aside how CBA came to realise, but there had been an issue in that in the serviceability calculator there wasn't proper consideration of various expenses. That's right, isn't it?
It's not quite that. There was consideration, but the way that the data moved from one system to the other, there was an error. And so the data was correctly captured at the first stage of that system by the customer or our frontline where appropriate. And it went into this decisioning system and didn't come out the other side in the correct places.
Mr. Van Horen, the position is, however, that whilst you might have spoken to the customer about these things, in terms of when you came to analyse their expenses, your decision-making process did not have regard to, and I'll be specific here, did not have regard to the rental amount that was put into the application, did it?
That's correct.
So therefore, what came out of this system, and if I can use this term, what was spat out by the automated system, was not an accurate reflection of what that person's expenses were.
That's correct.
Now, you're aware, aren't you, of course, given your experience and your role and your extensive experience at CBA, you're aware that as a credit provider, CBA must, of course, do certain things before entering into a credit contract with a customer?
Before we go on, Mr. Nelly, there seems to be some glitch with the screens. We just wait a moment and see what we can
Thank you.
do about that. Thank you. Go on.
Thank you, Commissioner.
You might start your question again. I've forgotten whether or not Mr. Van Horen has.
Thank you, Commissioner. I'm sorry about that, Mr. Van Horen. Perhaps before I start, I will go to CBA 0001.0028.0945. Now, these are the credit guide and usual terms and conditions for consumer lending with respect to overdrafts. You're obviously familiar with that document?
Yes.
You exhibit...
Is it a dated document? That is it current at a particular time, or is it unvaried?
Yeah, it's a good
the
question,
one-
Commissioner. There is a date, and I have the same question.
if I can assist you, Mr. Van Horen, this is the one as of the 1st of July 2011. And I'll take you to that, and where there is a difference, and I'll tell you that there isn't relevantly, the Commissioner would also be assisted to know that Mr. Van Horen has exhibited 5 versions over time during what I've described as a relevant period. So I'll go to the start of the relevant period. This is when your processes became automated.
Yes.
In July 2011. And if I could, having recognised that document and said that you're familiar with it, if I can go to point 0949, please. Now, Mr. Van Horen, I ask you to assume that this language appears in all of the terms and conditions over time. And if I can take you to under the first bold heading, we will not enter into an unsuitable contract with you. We will not enter into a contract or increase the credit limit of your current contract if it would be unsuitable for you. A contract will be unsuitable for you if you will be unable to comply with your financial obligations under the contract without suffering substantial hardship, or if the contract does not meet your stated requirements and objectives. What's the source of those obligations, Mr. Van Horen?
In terms of the legislative source, there's the NCCP Act, and ASIC has provided regulatory guidance in relation to how responsible lending obligations are fulfilled, RG 209.
I see. And are you familiar with RG 209?
Reasonably?
Yes. And generally with the process of responsible lending?
Yes.
It goes on then to say, in order to ensure that we do not enter into a contract that is unsuitable with you, we are required to make reasonable inquiries relating to your financial situation, requirements and objectives, and to take reasonable steps to verify your financial situation.
Yes.
And then you will see, and CBA acknowledges in these credit guides, under the next bold, that we are required to make an assessment that the credit contract or increase in credit limit is not unsuitable before we enter into a credit contract with you or agree to increase your current credit limit.
Yes.
Now, I asked you before, and I understand you're not a lawyer, but I asked you before what the source of those requirements were, and in fairness, I might ask for RCD.0022 .001.001 to be called up. 0001, sorry. And that's, of course, the National Credit Act. If I can go to point 0099. Or perhaps, in fairness, I'll go back to the page upon which 128 is. Just a couple of pages before. Thank you. And as you would be, thank you. And as you'd be aware, a licensee must not enter into a credit contract unless these various inquiries and verification made in accordance with section 130, just to put that in context.
Yep.
So if we go back to 130, and I do apologise for that, one then goes and says that it goes to that provision and says that for the purposes of that paragraph, the licensee, that is relevantly CBA, must make reasonable inquiries about the consumer's requirements and objectives in relation to the credit contract, make reasonable inquiries about the financial situation, take reasonable steps to verify the consumer's financial situation, and make any inquiries prescribed by the regulations. I'll leave that to one side for a moment. Then if one goes ahead to 133(2)(a), one sees this, and I'd like to draw attention to this because this is particularly relevant to the notices I'm about to come to. The contract is unsuitable for the consumer if at the time it is entered or the credit limit is increased, it is likely that the consumer will be unable to comply with the consumer's financial obligations under the contract or could only comply with substantial hardship. Now, is it right that what CBA puts in its terms and conditions is intended to give effect to its obligations under the Act?
Yes.
Now, before we come to exactly what happened during that relevant period, can I take you, please, to one of the 4 infringement notices that was received in August 2016, and I'll take you to CBA.0001.0028.0821. In your evidence, you've explained that in August 2016, in relation to the matters that are the subject of your evidence, 4 infringement notices were served on CBA. Is that right?
They were.
And relevantly, and I won't take you to all of them, there's some slight differences, but the one that I'm taking you to covers, I think, to be fair, it covers the relevant issues. The others may have different focuses, but the issue in all of them, and the allegation is that, and I'll take you to, you'll see in the paragraph beginning on 18 August 2015, 3 lines down, you, being CBA, engaged in conduct contrary to section 133(1)(b) of the Act, namely increasing the credit limit of a credit contract with a consumer from $2,000 to $4,000. Do you see that?
Yes.
Now, in relation to some of them, it's not in relation to an increase, it's in relation to offering a credit limit. But nothing turns on that for the purposes of my questions. When the contract was unsuitable for the consumer pursuant to subsection 133(2)(a) of the Act. Now, it then sets out, not verbatim, but essentially the terms of the section. And I'd like you to confirm that this is a correct statement of what occurred. Due to a programming error in the serviceability calculator, you assess the unsuitability of the contract without taking into account the consumer's declared housing expenses and living expenses. Instead, you substituted $0 housing expenses and living expenses based on a benchmark which was substantially less than that declared by the consumer. had you assessed the unsuitability of the contract, taking into account the consumer's declared expenses, the contract would have been assessed as unsuitable because the consumer's expenses were greater than the consumer's income. Is that correct?
It's correct.
Just understand that. Are there two difficulties or one rolled up difficulty there? That is, it says substituted $0 housing expenses. Is that one problem? And then is it a separate problem, taking living expenses based on a benchmark, or is it all one rolled up problem where zero's gone in for both items?
Yeah, there were two errors in the mapping, Commissioner. So the living expense, so the rental expense data that was input into the front end did not flow through to the serviceability decision, and therefore we assumed zero, clearly incorrectly, assumed zero rent, obviously a mistake. And then there was a second error in the way that the living expense looked for a data field, and it pulled the wrong data in. So the net effect of both of those was we did not take into account the correct...
But it's two issues, not one rolled up.
Correct. Two different issues. Both had the same outcome, which is that we underestimated or underassessed the customer's expenses.
Yeah.
And you were in your current role, I think, in August 2016 when these notices were served.
I was, yes.
And obviously then you're in a position to answer some questions about how that came to occur. You've given evidence that CBA discovered this issue on the 1st of September 2015.
Yes.
And your evidence that you've given orally and also in your statement is that it was whilst CBA was in the process of upgrading its decision-making platform, and also you say that it was during the internal review period that occurred after the calc notice. Is that correct?
It was during the internal review period commenced by the new manager of that business, the one I referred to earlier. So a new person took over the business. What he did was saying, off the back of the calc and the ASIC engagement on the short form, let's do a deep dive review across the whole portfolio.
And when was that decision made to do that? Because the calc letter was, you recall, back in July 2014.
From memory, he commenced in his role in the middle of 2015. Yeah. So the area was identified on the 1st of September. It was finished. It was fixed 2.5 weeks later.
That's right, on the 18th.
And then we notified ASIC in early November.
And I'll come back to that. But when, just to be clear, when you got the calc notice, whoever was in the position, CBA did not at that point or at any point until this new person started in the middle of 2015 do anything to look at whether or not the long form application was adequate, did it?
To my knowledge, no. The focus was very much on the short form, which was where, you know, if you think of where the risk, if you take a risk-based approach to this, there's generally lower risk in a long form application because by its very definition, you're gathering a lot more information about the customer. So the focus was on addressing the short form issues.
But you'd accept that obtaining a lot of information is irrelevant if the process that you put in place doesn't consider that information.
Yep.
So the issue was identified in September 2015. When did this issue, or as a result of that identification, when did you identify the start time for this issue? How long had the long form not been working, if I can put it that way?
Well, our investigation revealed that it went back to the commencement of the auto decisioning, which was 2011. So it was the relevant period, as you referred to, 2011 to 2015.
So it seems, so that's over 4 years that without this issue being discovered.
Yeah.
So for that period of time, that is from July 2011 to September 2015, when applications for a personal overdraft were assessed. Now there's two types. There's one for a new one and also for an increased limit. They were largely assessed during that period on the basis of the automated process that you'd put in place in July 2011.
Yes.
And CBA during that period, it's your evidence, that during that time they received 331,000 applications from approximately 287,000 customers. Is that right?
That's right.
Now, I said largely before because, as I understand the process was done entirely by a computer, except in one very narrow situation that I'll come to. Is that correct?
Yeah, very narrow.
And that very narrow circumstance is, and perhaps I'll take you to paragraph 11 of your statement. And that is court book. Oh, thank you, the operator's a step ahead of me. So if one goes to paragraph 11, it's the key steps in the process by which customers made an application and obtained approval for the establishment of a personal overdraft facility in the relevant period are summarised below. And you go on to explain those processes. I don't intend to take you to all of them, but the application could either be made at a branch, calling a call centre, or with a relationship manager. Is that right?
Yes.
And then various information was inputted by the relevant person using the information supplied.
Yep.
And then there's various matters which we can skip over for present purposes that might lead to ineligibility. That was assessed by, then one came to assess what you describe as the automated decision-making system at paragraph D.
Yes.
The application was then assessed by an automated decision-making system for both serviceability and risk.
Yes.
And what you were looking at was this, in sub-paragraph 1. What you were interested in is the serviceability assessment took into consideration the customer's financial position and assessed the customer's servicing surplus. The servicing surplus is the customer's net disposable income derived by deducting from the customer's income their rent, existing debt repayments and the hire of the declared living expenses and an internal expenses benchmark. Now that you refer to later in your statement, and just to put a bookmark on that, so to speak, the customer's declared living expenses were compared against what's described as an internal benchmark. What was that internal benchmark?
So I think the Commission's heard evidence around the HEM benchmark.
And was it that? Was it the HEM?
It was the HEM benchmark, but at the time, and we've changed it since, but at the time it was based on, it was the HEM benchmark with adjustments. So I can describe those adjustments. Essentially, we took, you'd be familiar, the HEM benchmark has your basic expenses and discretionary expenses. At the time, it was based on primarily on the basic expenses. And the rationale for that was discretionary expenses, by definition, were seen to be discretionary, as in for a small credit contract, there was the ability for a customer to flex those discretionary expenses to avoid getting into hardship as per the NCCP requirements. Since then, we've changed that and we moved to the income-based HEM, which is the 50th percentile of your basic and the 25th percentile of your discretionary expenses.
I see. So can I understand the HEM that you used at this time? How was that different? What were the adjustments that were made by CBA to that?
As I said, at the time, we used the basic HEM component, which is your minimum expenses, and we eliminated, or we did not take into account the discretionary component.
So the amount, if the HEM were to be applied, it was actually lower than what the HEM was, because you would take out of that certain discretionary payments.
There are many derivations of HEM. HEM is a set of benchmarks, and we've changed our practice over time. We certainly strengthened it a lot over time. So today we use...
But at the relevant time,
Correct.
at this time,
Yes.
it was less discerning because it was actually
Correct.
lower. During the relevant period, you asked people who filled out a long form about what their expenses actually were, didn't you?
Yes, and we've always had the practice of taking the higher of what they disclosed and the benchmark.
Let's be clear about this, though. The practice that CBA was actually doing, though, did not do that, because the practice was only that which was spat out by the automated system at the end.
Yeah, that's right. Policy is one thing, so our policy said we would take the higher of. Practice, the reality, as per everything we've said here, we know there was an error. We did not take that into account.
And that error went undetected for over 4 years, didn't it?
That's right.
Can I return to the service, what I described as a servicing surplus, and we were distracted, but essentially what your process required is that a customer must have a monthly servicing surplus of at least 10% of their pod credit limit, which would allow the customer to pay off 1/10 of their credit limit per month before considering interest and charges.
Yes.
Then the process goes on to also consider a risk assessment taking into account how long someone had been with the Commonwealth, with CBA and any other products. And then at subparagraph E you say, a customer who passed the automated serviceability and risk assessment, CBA would then engage an external credit bureau to provide a credit report for CBA to further assess the customer's risk profile.
That's right.
Then at that point, the outcome would either be a conditional approval or a decline or a referral for manual credit assessment, and that was done without the involvement of any human.
Correct at that point.
Now, you then go on, and this is, you'll recall that I said there's only one area, and I think you described it as very limited.
Yes.
Which was an appropriate concession. It is very limited. You would only actually look at those that were certain customers. I'm now reading from D, sub D. Certain customers, such as those with a servicing surplus of less than $100, those living in remote postcodes, or those who had high unsecured exposures were flagged by the automated system and referred for an additional manual assessment of both serviceability and risk.
That's right. So this is the category of manual referrals.
Thank you, Charles. Thank you.
The category of manual referrals where, because it was determined to be of a higher risk, a lower servicing surplus in particular, that there would be a manual review of whatever the automated decision had recommended.
And they are the only people where it would, during the relevant period, they are the only people where CBA would have considered their actual housing expenses or their actual living expenses during that time.
Yeah, I couldn't comment on the specific data that would be reviewed by the person doing the manual credit assessment. However, they would have, my expectation would be they would have looked at the available information to them, and if there was an issue or an error, they would have then come up with a different decision.
To be fair to you, I'm not concerned about those people. I'm only concerned about those people who never made it to G.
Yes, understand.
And the G people, you've said, were very limited, and that's right, on its own terms. It would only be those with a servicing surplus of less than $100, those in a remote postcode, and those with high unsecured exposures.
Yeah.
So for everyone else, that is, of the 331,000 applications, with the exception of those limited ones that fit into G,
yes,
all of the process would be done by an automated decisioning process.
Correct. I might add that, you know, the nature of the automated decisioning, we have regard to the size of the credit limit. And when we're talking about credit limits where I think 90% are under $2,000, it's very different to the decisioning process where it's a $1 million home loan or very large unsecured exposure. So we do have regard for that in determining what's automated and manual.
And at that time, 90% would have been under the 2,000 limit?
I believe that for the relevant period, 90% of applications, of approved limits are under $2,000 or less,
yeah,
and 75% are $500 or less. So broadly speaking, the very, very large majority of this portfolio of balances have limits under $2,000. There's a small number that will have a larger limit than $2,000.
Are those numbers today markedly different?
No, they're not. Those are essentially the then and now. They haven't changed a lot.
Tax, that's about it.
That's about it, yeah.
Yes.
So if the person had gone through the automated process and was offered a credit limit, that person could then accept if they wish to proceed with the application.
Yes.
Now, once the credit limit was accepted, the customer was required to provide a human, a CBA staff member, with documents to evidence income. Is that right?
Yes, that's right.
And I think you say in your evidence that where it's over $2,000, there was also a requirement to evidence liabilities to other financial institutions. Is that right?
Yeah, correct. So if the disclosed other financial institution or OFI liabilities were under $2,000, we did not seek to verify that information, but if it was above, we would want to get the bank statements or the like to verify what the OFI liabilities were.
Again, at this stage, though, the process there was no check at this stage by a CBA staff member of anything in relation to expenses other than those who were over $2,000, which you've just said in answer to the Commissioner's question was about 10% of people. Other than those people, there was no check at all of anyone's expenses.
I think there's a few things you're bringing together there.
Look, I apologise. Let me ask it one step at a time. You've said in answer to the Commissioner that it's only 10% of the approved limits that are over $2,000.
That's right.
So in respect of any that were below that, the only check in relation to the 90% was in relation to their income. Is that correct?
When you say check, you mean verification? Yes.
Yes. Sorry, I'm picking
verification.
up.
Obviously, we made what we think are reasonable inquiries, and that's one of the obligations under responsible lending. The other is verification, and we did the verification for income and for OFI liabilities where the limit's above $2,000.
Correct. Now, I think you said you'd concede now, though, that those inquiries weren't reasonable in the circumstances.
No, I wouldn't concede that. I think we did make reasonable inquiries with regard to our obligations under responsible lending and taking into account scalability and so on.
Mr Van Horen, it's your evidence, and you've said that in relation to 331,000 applications during that time, that you did not enter any housing expenses for any of those, but you did not consider any of the housing expenses for those people.
Yeah, correct. Sorry, let me just clarify. I think your question was we didn't make reasonable inquiries. I believe we did. So there are different obligations under responsible lending. Make reasonable inquiries, and I think we did make the reasonable inquiries. Where we didn't do it right was in the serviceability assessment, because in that case we didn't use the information correctly. So that's the error. It's not reasonable inquiries.
Yes, I understand the way you put it, and thank you for clarifying that. But so then, and it may have been the fault of my question, but what you would concede is that having had that information, then when you came to evaluate whether or not this was unsuitable for the person, that process fell short of what was required.
Absolutely.
And just to return to the issue that I raised before, in relation to those over $2,000, the 10%, for those you did assess some liabilities, some expenses, but only any liabilities to other financial institutions. That's right, isn't it?
It's not verified. You verified.
Verified, yeah. Assess is different to verify. So we verified means you get the documents to confirm that they're correct.
Yes.
So we verified liabilities, which are obviously different to expenses. Expenses, we relied on the customer's declared number compared to the benchmark, incorrectly used that in our assessment process.
And returning to the distinction that was drawn before in some of the questions from the Commissioner, there were two aspects to that, weren't there? There was, in relation to housing expenses, the insertion of zero rather than what was told to the CBA.
Correct.
And in relation to the living expenses, there was the insertion of if I can use the shorthand, a lower than HEM rather than what the actual expenses were.
Yes. And just for avoidance
Thank
of
you.
doubt, insertion was clearly not deliberate insertion by anybody. It was the error we made in our serviceability calculation and the mapping of the data flows.
The criticism is not made of the insertion at the relevant time. It's the process
Correct.
that was from July 2011, without overstating it, doomed to fail because of these two relevant questions not being
It
properly
certainly failed.
Thank you. So, on the basis of your evidence thus far in relation to the system, I think it's fair summary to say that the reliance by CBA on evaluating whether or not a loan was suitable or unsuitable or not suitable was dependent upon this automated system.
Yes.
Now, you say in your evidence that the process by which applications were assessed and approved in the relevant period was designed to comply with the responsible lending obligations in the Act. Is that right?
Yes, certainly our policy was absolutely designed that way. The process was intended to execute it that way. It failed to, as we've discussed.
Yes. But if I can understand, your policy might have been to design it in a particular way, but it wasn't appropriately designed from July 2011.
Yeah, the practice was not properly designed.
And can I just understand that? Is that, in effect, the program didn't operate in the manner that it
Yes.
was originally intended and designed
Correct.
to operate?
Exactly right. Yeah, the intention was never to
No, I understand that.
use a zero where.
Hindsight's a wonderful thing, Mr. Van Horen, and therefore the question's perhaps unfair. Is it something which, in hindsight, you think either could have, next harder question, should have been detected before rollout of the automated decision-making tool?
Yes, I think the short answer is yes, could have, should have. This is sort of zooming out a little bit for a second. We do a lot of changes. This is all, the error arose through change. We do thousands of changes every month in the bank, in the retail bank. And so having robust change management process to make sure that when we do a change, it works as intended, that's been a massive area of focus for us for years, as you might expect, and we've made lots of improvements. We're still not where we need to be. But for example, doing running systems in parallel. And in fact, that's how we identified this issue in the first place, by running those two decisioning systems in parallel and checking that the new one gave the correct answer based on what the old one did, or vice versa. And so having robust change processes, I think, was our failing, and it's clearly an area of ongoing work. There are other controls, which maybe pause if I'm talking for too long, but there are other controls in place to try and identify these kinds of issues where they occur. For example, we sample a proportion of every single credit decision every month to determine whether it was the right or the wrong decision, or whether there were any technical or documentation errors in that decision. And you would expect, provided you've got reasonable coverage in your sampling and the occurrence is quite widespread, you would detect it that way as well. I can explain why we didn't in this case if you're interested, but maybe I'll pause there.
Is it your evidence, though, that no checks other than what occurred on the 1st of September picked up any of these issues for over 4 years?
Correct. So they're no.
And if I may,
I think you wanted to add something, Mr. Van Horen.
Yeah, that's correct. So, I think it's a fact that the error was there from 2011 to 15. Some of those controls that we would normally expect to identify errors are both those change controls that I referred to earlier. We look at sampling errors, or not sampling, we do sample tests of decisions to check if they are correct. We do monitoring of complaints. So often if there's an inappropriate outcome from a customer point of view, there'll be a complaint, and then we try and see, is there a systemic reason behind those complaints, and then we dive into those particular issues. So, yes, a number of controls in place. They didn't detect it in this case until 2015.
So neither the sampling, the two examples you used were regular sampling, and where there's a customer complaint, neither of those things in the course of the relevant period were such as to pick up this error, were they?
Correct. And on the sampling point, as my evidence lays out, the subset of POD customers, personal overdraft customers, during the relevant period who were affected, as in had the incorrect outcome, was 1.8% of the total. And so to identify a very small subset of the entire population with an incorrect outcome, sampling unfortunately didn't detect that because it was such a small proportion of the total.
But there were no processes put in place in terms of data management during that period that picked up the issue either.
Certainly the issue wasn't picked up. There are various data practices, but no, they didn't pick this up.
You spoke of 1.8% of the total with a wrong outcome. Can I just understand what you mean by wrong outcome in this context? Are you saying should have been declined rather than approved? Is that the outcome you're mentioning, or?
Yes. So the best place to look is paragraph 22 of my statement, which refers to, we started with 331,000 applications from 287,000 customers, bearing in mind some customers are joint applicants to one overdraft. Just about half of those resulted in a pod being established. In other words, the other half were declined or withdrawn by the customer, 145,000. And of those, Commissioner, 10,500 had an outcome where they had either a limit they shouldn't have had at all, which is the 9,400 number, or 1,100 where they got a limit bigger than they should have had.
Now, you've given evidence that over the course of those 4 years, CBA was cognizant of its responsible lending obligations.
Yes.
And it also knew during this period that ASIC was making various inquiries in relation to responsible lending matters, wasn't it?
It was.
In fact, that had made its way to the board in August 2013, that very issue.
Yeah, if you can refer to me.
If I could, I'll take you to CBA.00502.0001.5074 no, sorry, that's the front page. I'm sorry. Now, obviously, a lot of this document is redacted and it's simply not relevant to what we're asking about, but can you describe what that document is?
So this is a report to the board by the group executive of the retail bank, so Retail Banking Services Management Report. So that is a monthly report covering a range of issues.
And if you go to the second page of that document, if I could ask the operator kindly to expand that. We have noted increased interest from ASIC in our compliance with responsible lending obligations. ASIC has made inquiries on CBA's reliance on the HEM in home loan serviceability calculations, and separately about an unsolicited offer of a conditionally approved personal overdraft. RBS, which is Retail Banking Services, is in the process of responding to ASIC's inquiries.
That's right.
So there was a, and if I may, Commissioner, tender that document.
Exhibit 1.114, CBA 0502 00001 5074, Retail Banking Services Report. Sorry, the date, Mr. Dinelli?
Yes, the date is on the previous page, won't you know? 12th of August 2013.
12 August 13, thank you.
So the board itself was aware that of these inquiries that were being made by ASIC, wasn't it?
Yes, yeah, we've kept the board up to date fairly regularly on all these matters.
And if I could take you to another document, about a bit over a year later, ASIC.0013.0001.0002, Now, this is a letter from CBA, as is apparent. It's not from you, it's from a Mr. Walker, James Walker. And if I could take you to the first paragraph, please. There's reference there from CBA referring to a letter dated 24 September from representatives of Consumer Action Law Centre, Financial Rights Legal Centre and Financial Counselling Australia to Nicole Scott at ASIC, a copy of which was forwarded to the bank, and the discussion Nicole had with me on, and that would be a reference to Mr. Walker, had with Mr. Walker on 9 October 2014 around next steps. Now, this followed from the first CALC or Consumer Action Law Centre letter, didn't it?
Yes, on the short form process, yep.
You're keen to emphasise that it was in relation to the short form, and I accept that that is the case, but what appears from this is that clearly CBA was on notice that ASIC was interested in responsible lending issues and in particular dealing with a number of concerns about overdrafts.
Yeah, without doubt. I mean, we've had lots of engagement with ASIC over a long period, as I think of all credit providers, around responsible lending.
Can I tender that, Commissioner?
Exhibit 1.115, ASIC 0013 0001 letter CBA to ASIC 21 October 14.
Thank you, Commissioner. That can come down now. Can I ask you what the risk management leadership team is at CBA?
We have a support area in the group called risk management. So it reports to the chief risk officer of the group, and it would have representatives of, for example, the retail chief risk officer and all other key divisions would be part of that leadership team.
Are you on that team?
No.
It has an important purpose, though, as I understand it. It said to work together to support the leadership, operations and development of the risk management function across the group.
Yes, I would expect so.
Perhaps I can take you to a short document, CBA.0002.03.4220. Have you seen this document before?
I've seen it, yes.
Can you explain to the Commission what it is?
Well, my understanding of it is it's a simple charter, if you will, as to what the modus operandi is of that leadership team. So the expectations of the team as to how they conduct themselves, what the operating principles are, and so on.
And the purpose I've already taken you to a moment ago before I put the document up. Can you explain, in your words, what it's intended or why the expectations of the team would be set out in the way that they are in this document?
Well, I can only assume it's because a new chief risk officer was appointed to the group a couple of years ago. I couldn't give you the exact date, but I think it was probably about 2 years ago. And I think, as you would expect, well, it's often customary when you've got a new leader of a team, they use the opportunity just to be clear with their team about what their purpose is, how they're going to work together. And I am speculating somewhat, but this looks very much like that kind of document to say, well, new leader, we're a new team, this is how we're going to work.
You'll find in the footer that the date is the 29th of June 2016. Can you see that? It's a little bit small.
Yeah, it feels about right based on when the new CRO started.
And broadly, what's the purpose of having a risk management leadership team?
It's like any leadership team, right? You come together where you've got common goals and objectives to achieve the common outcomes that you have. The risk function across the group plays a very, very important role. So I think you might have heard testimony in the Commission to date around line 1, line 2, line 3. So line 1 essentially would be me as the business leader. I have line 1 accountability for risk. This group of people are generally speaking line 2, which is one layer away from the business, and therefore their role is around challenge and policy and a degree of independence. And then line 3 is audit, internal audit, external audit. So this team here, their purpose is to play that line 2 role effectively across the group in setting policies and providing independent advice and challenge to the business.
And to stop risks eventuating into problems for the bank.
I wouldn't put it like that, no. I think the accountability for that sits with line 1 in the first instance.
This document seems to suggest that one of the things that they do is identify issues so that risks within the bank can be managed. Is that right?
Yeah, for sure, absolutely. I mean, we all have that accountability, but if you're in a line 2 function, you have a particular focus on identifying issues, raising them, alerting management to them, escalating them where appropriate, reporting them, engaging with regulators and so on.
Would it be accurate to say it's sort of a bigger picture, sort of looking at the processes of the bank and say, well, where should we be focusing to stop things going wrong, if I can put it that way?
At a very simple level, yes.
Well, at a simple level,
they get into a lot of detail as well, right? It's not just a central team that sits somewhere in a central building. They have members of their team sit right in the business as well, supporting, engaging, challenging, providing guidance in the business as well.
And the risk management team would be cognizant of things like what happened here, where you had a process that for over 4 years went wrong.
Yeah, they would certainly be aware, involved, engaged.
And seeking to improve processes so that those sort of things don't happen again.
Yeah, as I say, the primary accountability for improving processes would not sit with the central team. It would sit with us as business owners. And, it's our failing, it's our accountability when things go wrong. Obviously, they're there to support us, challenge us, provide advice. But at the end of the day, it's the business owner who's accountable.
I see. I'm going to move to another document. I might tender that, if I may, Commissioner.
1.116 CBA 000203434220 Risk Management Leadership Team, Purpose and Operating Principles, June 16.
29 June 16.
Yes.
I might take you to CBA.00002.0343.4190, if I may. This is a meeting of the Risk Management Leadership Team that occurred on the 6th of July 2016, is that right?
It looks like it. It looks like the agenda.
And I won't take you back to it, but one of the operating principles of the Risk Management Leadership Team is that RMLT, which seems to be the acronym used, meetings take precedence over every other meeting. We attend every team meeting except when sick or on leave. Do you recall seeing that on?
I don't recall that sentence, but I'm sure it was in there, yeah.
So these meetings are taken seriously, one hopes, by the people who attended. I'd like to take you to a heading on page .4194. And one of the issues there, the areas of focus, so the date, just to remind you, the date of this meeting is the 6th of July 2016. And it says the areas of focus have been ordered by priority for discussion with RMLT. And the first thing is data management. Can you see?
Yeah, I can see that.
And there's a reference there to the yellow area at the bottom. There's a note. The yellow areas are those new for financial year 16, while blue are repeated from financial year 15 or significantly similar. Those with an asterisk were mentioned in the RMD cover letter to APRA for financial year 15. Are you aware of what that issue is that's referred to there?
You're talking about the second point, the
Yes.
RMD cover?
Yes.
RMD stands for Risk Management Declaration, as I understand it, which I believe is a declaration made, it follows a process up to the board, and I think by the board to APRA. So it's where the board of the bank has to, or the group has to say how it assesses the broad risks in the group.
So in effect, it has proper processes in place to manage
Yes.
risk, doesn't it?
Yes.
I think
Yes, it does. It's a
the
fairly
essence of it,
comprehensive, yes.
yeah.
If we could jump ahead a couple of pages, data management, then the discussion of it starts at 4196. And Mr. Johnson, I understand, presented on it. Why is this? Just won't be a moment, Commissioner. Is that one of the ones that was meant to be removed? Perhaps I can skip ahead while we seek to resolve that issue to the next page. Can we sort that out? It's meant to be. I think we've resolved that. I'm sorry, Mr. Van Horen. Under the heading Data Management, there's a discussion that the framework is less than effective in allocating data ownership responsibilities to detect and prevent DQ issues. Now, the issue that arose that we've been talking about today is such an issue, a DQ issue, isn't it?
In the very broadest interpretation of data quality is a massive issue in the bank, as you could imagine. I think the context that might help, as I understand it, and not having been part of this, I'm not part of this team, but as I understand this focus here on data management is very heavily focused on the regulatory reporting around capital in particular, because you could imagine from APRA's point of view, the way we understand the risk in our business around holding of capital against those risks is really very, very central to them. And specific example might be things like having good data on your loan-to-value ratio in your mortgage book, which is a massive part of our balance sheet. And therefore, if we don't have good data on that, there would be a question about, well, are we holding the right capital?
Yes, but what this goes to incorporates matters of the type that we've been talking about. If one goes to the second dot point on the far left margin, significant and unexpected data quality issues continue to emerge, which are expensive to remediate. Now, that's a reference to the sort of issues that had to be remediated by reason of what we've been talking about this morning.
I couldn't comment whether that sentence refers to the specific issue. As I say, I think the issues referred to here are probably a little more macro than the personal overdraft matter specifically. It's not to say we don't have significant challenges around data quality, as I think most large organisations do. And we've had examples in my previous testimony around very specific instances around, for example, understanding hours worked by customers. Those are very micro data quality challenges that we have throughout our business. We work hard to close them down. I believe that this document here refers to something different, but if your question is in the very broadest terms, does the pod matter link to a data quality challenge? The answer would be yes, clearly.
And returning to the top of that document, so the framework is less than effective in allocating data ownership responsibilities to detect and prevent DQ issues. And it then says the framework was restricted to IRB credit data in October 2014, and this area itself is only partially compliant with further funding and date extensions, likely. The restriction has been in place for almost 2 years.
Interrupting there, that first dot points about prudential capital requirements.
Yes, I believe the reference to IRB here would be internal ratings-based system, which is
Prudential capital.
prudential capital is
Therapy.
determined by your ratings and the models you use to understand risk in your overall portfolio.
So we're not talking about that, except that's not something that comes up in your evidence today. This is what comes up in your evidence would be non-IRB data issues. There's some reference to that in the neck. The restriction has been in place for almost 2 years with no approved plan allocation of funding to progress practice improvement or policy compliance in non-IRB credit data areas. And that indicates that there's no approved plan allocation of funding in relation to other areas in relation to such credit data areas.
It's very hard for me to interpret what that sentence refers to specifically. There are clearly requests that come up from time to time around projects to improve data quality, to improve systems, to improve processes. I can't comment specifically on what that refers to around no approved plan allocation of funding. That seems to me to be referring to something specific to the previous dot point.
Is the previous page still not working? What's that? You can or you can't? No, that's okay. If one goes ahead to 4212, the heading to this, or the ninth subject, is compliance with serviceability policies and procedures. Do you see that?
I see it.
And under the executive summary, the risk management leadership team, it was noted within the RBS proprietary channel, errors relating to serviceability verification for mortgages were evident through internal reviews and audits completed by our mortgage insurer, Genworth. Did you see that?
Yes.
Then APRA raised a requirement in relation to serviceability policy compliance in October 2014. Mortgage credit risk
Mortgage credit risk review, yep.
And the corresponding action items to address these issues were open during FY16.
Yes.
RBS also identified that system errors resulted in some serviceability calculations being incorrect. That's an issue of the nature that faced your part of the bank, isn't it?
It's the same responsible lending and serviceability topic. It's not the same nature of issue though, but clearly it's in the broad category, yes.
And if one goes to the next page, it indicates there that the existing risk frameworks that relate to compliance with serviceability have a combination of automated and manual controls operating across different teams within the product value chain. Do you see that?
Yes.
Errors are occurring in the income calculation verification processes and missing existing debts commitments.
Yep.
Over FY16, a significant amount of work has been undertaken to enhance these frameworks.
Yep.
And again, if one goes to the implications, the second dot point indicates applications may be approved that are in fact outside credit policy and or appetite.
Yep.
And that's the nature of the issue that we've been talking about this morning.
Correct.
Are you familiar with a data management strategy?
The data management strategy.
Yes.
I'm aware that there is a lot of work going on across the group around the management of data. Perhaps if you point me to a document, I can see if I'm familiar with the document.
I'll do that, and I might tender that document, Commissioner.
Exhibit 1.117 CBA 000203434190 Agenda Risk Management Leadership Team 6 July 16.
It seems to be that, sorry, if I can take you to CBA.0002.0347.1582. Now, I know you weren't party to this email, and I'm not putting it to you that you were party to it, but you'll see that it's from Fiona Lanark. Now, I didn't point out her name, but she was the person who presented on Agenda 9 at the Risk Management Leadership team,
Yes, I
do you
saw
recall?
that. Yeah.
She says here to David Cohen, can you assist the Commission by informing us who David Cohen is?
David Cohen is the Chief Risk Officer for the group.
Thank you.
Fiona's manager. So Fiona
And
reported to David.
Fiona's written an email, and this email is about a month after the Risk Management Leadership team meeting that I referred to, and she's dealing specifically with pods.
Yeah.
And pods, personal overdrafts. And she says, as per the discussion earlier, this is the summary of the pods issue. I won't take you to that attachment, and interactions with ASIC. IN also apparently asked Matt yesterday if we had this exact issue elsewhere. My understanding is not exactly this particular issue, but we have issues with servicing calculations which are a mix of system and human error driven. Do you see that?
I do.
Who's the reference to IN?
Ian Narev, our CEO.
Who was the CEO at the time.
Yep.
And Matt.
Matt Common, the head of the retail bank.
And Ms Lanark goes on to say, more generally, we have pulled these into a single report for visibility across products. Some of the issues are minor but outstanding for a long time. Do you see that?
I do.
Then, if I can skip ahead, she says, the change we are making is to take a portfolio rather than a product view of these issues, which would be partly addressed in a project called Big Data for Risk. Do you see that?
Yeah.
That would costing 3 to 4 million, which was rejected, delayed in the most recent round of funding requests by RBS last week. You see that?
Yes.
I'm in the process of escalating this. So, in August 2016, there was, as I understand it here, a project, Big Data for Risk, which would dealing with some of these issues that have arisen in personal overdrafts, that was rejected at that time, wasn't there?
Yeah, I can explain that. So the way our project requests and prioritisation processes work is we run through regular cycles where people like myself or colleagues like Fiona would put up a project for consideration. This was one of them that was put up. It was very much a placeholder. There wasn't a lot of information behind the proposal. I recall the meeting at the retail leadership team where this proposal was considered. It was not approved, as Fiona correctly points out. However, I had the view, she had the view that it was something important to do, and I can explain what it is if you're interested. But we thought it was important to do, and whilst it wasn't approved then, it has been subsequently approved and is in the several components of it have already been implemented, and others are still in train.
So it was approved after. Do you remember when it was approved?
Well, I remember several meetings that I had personally with myself and with our retail CFO, Chief Financial Officer, to try and find a way to fund it because we thought that it was an important project. And even though the proposal was still under development, we agreed that it was a priority and that we needed to proceed with it. And so that is what's happened.
One of the reasons you would have said it was an issue, surely, was that the fact that you'd had a process whereby you had been in breach of responsible lending obligations for over 4 years because of an automated process. That would be a relevant factor, wouldn't it?
Well, by then it had been fixed, yes. So this was a year or so later. The project, just to explain what it was, big data for risk, it sounds grand. What it was doing was using the data that we have across the group to assist in the credit decision and verification process. So to give you a practical example, around liabilities, we are building, and this has been implemented in one portfolio across our retail bank, not in all yet, it will be, is to try and build a tool that looks at outflows out of our customers' accounts to determine what the liabilities with other financial institutions might be. Now, again, that's an imperfect science because it's difficult often to trace that, but to build a model which would help us identify OFI liabilities, which, as you know, is a key part of the assessment that we have to do. And
well, for people over $2,000 at the relevant time.
This is going to be used across all portfolios. When I say portfolios, I mean home loans and credit cards and personal loans and pods. So it's an example of what this big data for risk project is building. It has built it and it's been deployed in one of our portfolios. It will be rolled out in the others. I'm talking about what we call COM liabilities.
But sitting,
What liability?
We call everything COM something, COM income, COM liability. So
Yes.
the COM liability module of what we're building under this program is the one that is attempting, and I say it's an attempt and it's not a perfect science, but to build on our data in our customers' accounts to understand where there is potentially an undisclosed OFI liability that we can then use in our serviceability assessments.
let me take you back to personal overdrafts at this time. When this issue arose in August 2016, you must have been concerned that not insufficient investment was being put in data risk issues, given what had happened for the previous 4 years, where you had an unchecked system which caused the bank to breach its responsible lending obligations.
Correct, and that's why I sponsored the project to get it across the line.
Yes, and despite your, no doubt, valiant attempts, the most recent round of funding requests by retail banking services rejected the spending of $3 to $4 million on that issue, didn't it?
No, just to recap, so, it's not a once and done process, right? So we're constantly looking and updating our priorities and adjusting our investment portfolio as appropriate. And so, correct, it was declined in that first round, but we found a way to do it subsequently, and funding has been allocated and the project is underway. Well, it has delivered a whole bunch.
I understand you're going to what happened then, but I wish to focus just on the 23rd of August 2016, which is around this time that you said you were sponsoring this. This is 1 year after this issue has arisen, when you were first in your role, where there's been a failure, and I think you properly conceded there was a failure of the process, the automated process, yet despite that, it appears that the bank wasn't willing to do the very investment that's needed to stop these things happening to its customers in the future.
I'm afraid I can't concede on that point. The nature of the way project prioritization works in our bank and perhaps others is at any one time there's a long list of wish lists, if you want to call that. There are many, many projects that are seeking funding. There's a finite capacity to fund those, so a significant number of the requests for funding will be declined. As I said, it's not once it's declined, it's all over. We all recognise that it was an important area. That's why I continue to advocate for the project, and with our CFO, we found a way to fund it. And so, yes, it was declined in that first meeting, but the reality is it's been supported and has executed a bunch of stuff and will continue to execute.
What's the time period between this speaks of delay last week, so say 16 August of 16, project doesn't get up, what's the period that then elapses before the project either gets up in whole or in part?
Yeah. I recall several meetings, some with Fiona, some with David Durante, our CFO, and myself, and with a few of our project portfolio team members in the months after that meeting. So it was over a few months. I checked in with the team recently just to see how the delivery has been going, and several of the modules or components, it basically got, I think there's 6 different components to the overall program of work, and several of them have been delivered some months ago, so they've been implemented for quite a while.
Can you tell me when work on a deliverable started?
Commissioner, I would be estimating. I can check exactly.
That's the best we can do at the moment.
Yeah.
The estimate will be
It
useful.
would be at least 6 months ago, would be my estimate that the work started. It could be 9 or perhaps a
That
little.
order of magnitude.
It's of that order of magnitude, yeah. It's not in the last week or month. It is going well back into 2017.
So if we thought in terms of mid-17, giving a lot of flex to mid, are we
Yeah,
about
I think
the
that would
right-
be in the right range, yes.
Right range?
Yes, and
Yeah.
yes.
So you described yourself as a sponsor of this and that you wanted this to happen and that it did happen in mid-2017 using the flex the
Yeah,
Commissioner
kicked
referred
off,
to.
so in the different modules and streams. And, to be completely transparent, there are some work streams that have not yet kicked off, but we prioritised what we considered to be the most impactful and important first.
Surely the breaches of consumer lending obligations was a important factor in getting this project over the line with your colleagues, wasn't it?
Sure, it's got multiple benefits. So I think the strengthening of our credit decisioning has both regulatory benefits, customer benefits, financial benefits, because we make better decisions at the end of the day. It's not in our interest to write bad loans. So it's got many, many benefits to execute a project like this.
But despite those benefits, though, it obviously took you some time to convince others within the bank that this was a good idea.
Look, that's the nature of having to get priorities agreed. There's as I say, many demands on what are finite.
I understand that, but
resources.
one of the reasons there was this demand on this time was because of breaches of responsible lending obligations. That's a significant issue, is it not, for
just
the bank?
to decouple those a little. So as you recall, the breach that we're referring to in this case study was corrected back in 2015. So this project here was never going to address that particular issue.
I accept that it
was
was.
strengthening our responsible lending practices right across the retail bank.
And as you've said, you were using automated processes, and I assume the bank still uses automated processes, and you wanted those automated processes to ensure that the bank didn't breach the relevant law in relation to responsible lending.
As a non-negotiable, clearly we don't want to breach any laws, but I think we're trying to go a little bit beyond that as well.
Can I just then understand the first paragraph? After the reference to Mr. Narev, how am I to understand what's written there? What do I take away from that sentence?
The one that says my understanding. So I think the question that the CEO typically asks us when we escalate an issue is, well, that's all very well, but could it be happening elsewhere? And
Here or is it elsewhere? Yeah.
yes, is it an isolated incident? Have you looked systematically across the board to see whether it could be occurring elsewhere? And Fiona's response is not exactly this particular issue, because it was quite a unique set of circumstances in this PODS matter. But we have issues with servicing calculations more broadly, which are a mix of system and human error driven. So examples of that would be, we do this monitoring that I referred to briefly. The acronym is CSNM, so Credit Support and Monitoring, which is the post-decision monitoring that we do to determine whether the correct decision was made or not. And it also checks whether we've documented all aspects of this, for example, customer consent or similar kinds of documents that we need to keep on file. And so one of the issues that we've had in the past is, human error driven would be where we haven't, in fact, we've made a poor decision not in accordance with our policy, or we haven't documented all aspects of that decision, or we can't retrieve the documents that were there once upon a time. So that would be an example. I would expect Fiona's flagging, rightly, and I wouldn't pretend anything to the contrary, but getting servicing right across the board is clearly an area of challenge, and it's very relevant to the Commission's
Human
work.
errors occur.
Human error and, the evolving nature of expectations of what is okay to meet our responsible lending obligations.
It's the reference to system error that.
Yeah.
What do I take away from the reference to we have issues which are a mix of
Yeah.
system and human error?
I'm trying to think of what Fiona might have been referring to there in saying mix of system and human. I think the pods example clearly would be one where it was a system-based error. It's entirely probable that there are other system-related issues from time to time that come up, whether it's similar or different to the pods matter, that get identified and fixed. I couldn't say what the specific ones are that Fiona had in mind there.
What this email demonstrates, however, is that a concern was being raised as to whether or not there was a problem within the bank in relation to these processes generally, wasn't it?
I wouldn't make a sweeping conclusion like that from this email. I think Fiona was being quite specific about the big data for risk project that we've discussed. And I think it's entirely appropriate that she would escalate a matter like that to her manager. She discussed it with me, she discussed it with other colleagues of mine, and that's why we landed up where we landed up, which I think is a good space.
But let me be clear though, this was after there'd been a process in place, an automated process that didn't work for 4 years. You discovered the issue. Then 1 year later, there's a question as to whether or not this is an issue within the bank generally, or there's other issues that you should be looking at, and you're having to fight on your evidence, you're having to fight to get this process through, and it does come through middle of last year. 6 years after the very issue that we've been talking about first arose within CBA.
Yeah, as I say, with respect, I feel you're conflating two different issues there. The first issue was a very different one around the pods error, and have conceded that many times now that it was an error. Was this email flagging that the initial decision to not support that project was a concern? Yes, and I think that's a great process. And the fact that the escalation and my and other sponsorship resulted in an outcome where it did get support, I take that as a very healthy process.
But with respect, it doesn't conflate them, because the very thing that this was looking at doing was making sure within CBA, insofar as automated processes are used, they work properly.
No. I've tried to describe what the Big Data for Risk project was doing. It was using data that we have to strengthen our credit decisioning and our verification processes. That was the overarching objective of this goal, of this project, which I think is different to what the underlying problem was in the pods matter.
But what the underlying problem was in the pods matter was that you had a system that didn't work, that allowed CBA to fall into
Correct.
breaches of responsible lending obligations.
Yeah, that's right, and that was fixed within a couple of weeks of it being identified. This project was not going to try and fix the same issue. This project was taking us to a different level.
We might be at cross purposes. I understand that the issue was fixed, and it was fixed within 17 days. You realise on the 1st of September, and it was fixed by the 18th. I accept that. What I'm asking, however, is here, 1 year later, you're sponsoring a project which is directed at seeking to ensure that these automated processes, that the data that you are using, to use your language, that is to ensure, and I won't seek to repeat your language, but it was to the effect that you would use that data to make better decisions. That is to make decisions, better decisions for the bank, but also better decisions, one would hope, in relation to responsible lending.
Yeah, so I think we've agreed there's a certain minimum standard that we aim to achieve, and that's absolute compliance with the requirements of the law and the related regulations and asset guidance and so on and so on. This big data for risk project was, in my opinion, going beyond that and trying to move to a next level of fulfilling our responsible lending obligations.
And you say that it was intended to fulfil your responsible lending obligations, yet also on your evidence, it was rejected in August 2016 and you finally got it through in the middle of last year. That's correct, isn't it?
Got it through is different to starting. There's a decision made
Well,
today.
it started.
It takes some time for a project to be mobilised, find the right experts, scope out what exactly has to be delivered. So it started delivering last year, not
So
the decision was made some months
So
before.
the project that you say was to increase the level of compliance with responsible lending obligations started in the middle of 2017.
I didn't say that, and I didn't say it was compliance. I think there's feels like we really at cross purposes here, but there's a minimum degree of compliance, and we have always striven to achieve that. This big data for risk project is trying to take that to the next level.
Commissioner, may I seek to tender the email from Ms Fiona Lanark to Mr David Cohen dated the 23rd of August 2016?
That'll be Exhibit 1.118, which is CBA 0002 0347 1582.
So how... That can come down, Mr Operator, thank you. So how would you describe, at or around this time then, CBA's...
Sorry, which time, Mr.
sorry.
Donnelly? I'm lost.
Thank you, Commissioner. So the email that I took you to was August 2016. At around this time, this is approximately 1 year after the notification in September of 2015. So around August 2016, how would you describe the data management or the issue of data management within CBA?
Can you be more specific in your question? That's a very, very broad question. Data management within CBA. Is there something specific?
The ability of the bank to manage its data according to its policy obligations and legal obligations. How would you describe that at around August 2016?
I would say in August 2016, broadly speaking, we certainly had areas that we had to improve. We know we've got a lot of work to do. I don't think we'll ever get there and be able to put a full stop behind the sentence of saying we have got data management 100%. But I do think against that qualification broadly, we were managing data reasonably well and doing it in ways that were compliant with our obligations, with the exceptions that we've obviously discussed.
Can you describe for the Commission what the Data Governance Committee is at CBA?
I'm not a member of it. I have some knowledge of it. So I believe that the Data Governance Committee is a forum at a group level which provides a degree of oversight over some of the macro data governance aspects. And I believe, may be incorrect, that it's focused very heavily on the regulatory reporting data that we touched on earlier, for example, around our reports to the APRA and other regulators, capital and the like.
Can I take you to CBA.0002.0351.4418? Now, this is a meeting of the Data Governance Committee. In fairness to you, you weren't at this meeting. Those who were present are on the next page. So, I'm sorry, this meeting was held on the 17th of October 2016. And there's the minutes of the previous meeting commence on the next page, and you'll see that it's a meeting that is attended by very senior people within the bank. Is that right?
That's right.
Including the CEO at the time. Mr. Narev was there,
Yes.
at least at the previous one, and he's a member of that committee. And Mr. Cohen, who we've heard about a moment ago, he's the chair of that committee.
That's right.
And one of the issues that was raised on page 4423 was under the heading near-term oversight focus areas. Now, that committee there at 5.3, one finds data management as a strategic focus area and corporate discipline to prevent new instances of future asset value degradation continues to be unfunded and lacks effective sponsorship. You see that?
I see that.
And then a general decline is becoming evident as BU, that's business units, I think.
It would be.
Governance forums are beginning to fail to get quorums. The use of delegates, often to junior level, appears to be increasing, perhaps highlighting the challenge of competing priorities and a lack of dedicated data management roles.
I see that.
That seems to be a rather pessimistic view of what was being done about data management at the time within the bank, isn't it?
It does look pessimistic, yes.
And of course, the issue that you've referred to was in September 2015, yet this meeting in October 2016, more than a year later, indicates that despite the fact that there's been $2.5 million in remediation of customers, and despite what happened during the relevant period, these sort of things are still being said at CBA.
I don't think those two things follow, unfortunately. I think the statement says what it says, but I don't think the connection that you've drawn is apparent, as in the connection between the pods error that we made and this conclusion. I'm not sure that this statement is referring to that.
I'm trying to explore with you, and I'll put it clearly, what I put to you is this, that why isn't it open to the Commission to take the view that the culture at CBA reflected here was that CBA just simply didn't care about these matters, and things like the pods incident is merely symptomatic of a culture that wasn't giving adequate attention to this data management issue.
Yeah. With respect, I think that would be the wrong conclusion. I think the facts of certainly the pods case that we've outlined do not support that conclusion. The fact that the issue was identified ourselves, was fixed ourselves very quickly, was reported proactively to the regulator. We've taken steps to put customers right if they were impacted. I think that case study simply does not support a conclusion that the culture of CBA is one that doesn't care.
Can we turn to Your Honour, Commissioner, I'll seek to tender that document. That is the meeting of the Data Governance Committee on the 17th of October 2006.
16. Agenda Data Governance Committee, 17 October 16, CBA 0002 0351 4418, Exhibit 1.119.
Thank you, Commissioner. Can we move to a different issue? Your evidence is that you informed ASIC of this issue on the 5th of November
I believe so.
of 2015, I should say.
Yep.
You first became aware of it on the 1st of September, didn't you?
Yes, not me personally, but
The organisation.
yeah.
It was fixed on the 18th of September. This is around the time that you're dealing on a regular basis with ASIC, or ASIC is dealing with RBS, Retail Banking Services, on a regular basis in relation to responsible lending processes, isn't it?
Yes.
There's no explanation for why you waited from the 1st of September to the 5th of November to tell ASIC, is there?
Well, yeah, I've made inquiries to understand what the breach reporting obligations are in this type of instance, and my understanding is that wasn't a breach under the Corporations Act, therefore Section 912D did not apply. It was a breach under the NCCP Act. So technically, there was no 10-day reporting obligation. We had a meeting planned with ASIC, as I understand it, on the 5th of November, and we used that opportunity to provide them with a detailed update.
Sorry, what day was your meeting with ASIC?
I think it was the 5th of November.
5th.
Down the bottom. So you are familiar with the obligations on licensees such as the CBA under 912D of the Corporations Act?
Yeah, I am familiar, and as I said, I made inquiries on the specific question as to what our breach reporting obligations were for this case, and certainly the advice from my legal colleagues is that...
And I don't need you to trespass into matters of advice, but subject to what Counsel for CBA might say, but are you referring to discussions which occurred at the relevant time or more recently? Are you referring to discussions you've had are you referring to discussions as at September 2015, or are you referring to discussions?
Well, I wasn't
more
in
recently?
this role in September 2015, so clearly not that, but in preparing for the Commission, I did investigate, was there any concern around the gap between us identifying the issue, fixing it in September, and discussing it, raising it with ASIC in early November, and the view that I've had is that no, it wasn't a technical breach obligation on our part, reporting obligation on our part. Cut through all of that, I think the substance of the matter is we moved pretty quickly to let ASIC know about it, and the subsequent process then took its course.
You're well aware of the obligations on the bank to do all things necessary to ensure that the financial services it provides, covered by the licence, are provided efficiently, honestly and fairly?
Yes.
And that where there's a breach of that, and it's a breach or a likely breach, and where it's significant, that ought to be done within 10 days?
Yeah, as I've just said, absolutely aware of that obligation. The legal view we had was that it was a slightly different set of reporting obligations. Nonetheless, we did what I believe is the right thing, and we reported to ASIC pretty quickly.
Could have informed them earlier, though, couldn't you? You were in touch with them at the time.
Sure.
I'll take up one last issue with you, Mr Van Horen, and that's the issue of...
Just before you go from that, do we know whether the report that was made to ASIC in November was in form a report under 912D, or was it a report in another form?
I believe that it'll be part of my exhibits, Commissioner,
Yeah,
but it might, from
that's what I'm
recollection,
asking
it
to help
wasn't framed as a breach notification.
912D.
No, it was a report, not a 912D report.
If you can just point to where that is in the documents, it'll just help
Sure.
close the loop.
Yeah.
Reading transcript. it doesn't come up quickly,
No,
Mr Van Horen, I don't want to...
Commissioner, I've found it while we're waiting. So in my exhibits number 11,
Yes.
it's a PowerPoint document which outlines the conversation, and I believe that was followed up with a letter, which perhaps my counsel will assist me, but there was a letter as well which followed.
Yeah, I
and
couldn't
then
quickly identify it, but look, we won't delay, leave it to Mr Sherry to sort it out later.
And in fairness, I think Mr Van Horen's evidence is as well that there was a phone call which preceded, I think, the day
On
prior.
5 November, I think, or
yes,
there was a
on the
conversation on
4th.
5 November,
Yes.
wasn't there, Mr
yeah, I
Horen?
believe so, yeah.
Yeah.
Can I go to CVH9? Sorry, I should give the court book reference, CBA.0001.0030.3791. This is a report from EY. Just to assist the Commission, there has been some reference to EY already, but how was EY involved in this, Mr Van Horen?
What we did was ask EY to come in as an independent party to review the way we had done the remediation. And so having set out the business rules, as you'd appreciate, there's choices to be made as to exactly how you determine who's to be remediated and so on. Having done all that work and agreed the process with ASIC, so we'd agreed everything with ASIC along the way, including the very detail of the letters that went to the different categories of customers, and that's all in the documents submitted to the Commission. EY then were asked to come in independently and provide a report, which is the one you see here, as to whether we had followed the process in the correct way, and if there were any areas that we needed to do differently or better.
And I think you'll see there in the second paragraph, it says a system error occurred on the 5th of June 2011, which led to incorrect expense data being used in the servicing assessment of several full-form POD applications. This overestimated some customers' capacity to repay. The bank identified the system error in September 2015 and deployed a system fix on 18 September 2015. Now, the remediation program, EY go on to say, is it right that they identified 10,593 accounts that were impacted by the system error?
Yeah, see that in the letter.
Did CBA know about those accounts on the 30th of September? Is that 2015? Is that what's intended to be conveyed by that?
The way we did the remediation, and this was subject to some internal discussion, was the nature of an overdraft. It's a fluctuating facility, right? So therefore, how you determine what the appropriate refund or compensation is for customers is quite tricky, because it's not like a normal loan that's got an amortizing balance. And so we had to draw a line in the sand on a particular day and say, okay, we will take a particular day and look at all customers from that day backwards and see what the impact has been on them. So that was the way we identified who was in which category, because as you would have seen from some of the correspondence, customers fell into different categories. They might have closed their pod already, or they might still have it, or they might be in hardship or in different groups. And therefore we took a date. I think it was the 30th of September, but I'd have to check if that was the exact date.
And the remediation that was given is indicated there to be $2.1 million, is that right?
In this letter, that's what it refers to. The final correct figure was closer to $2.5 million.
Yes. In fact, that was one thing I was going to deal with. Perhaps I can quickly call up RCD.0001.0003. 0075, which might be a pinpoint. And this is a response that was made by CBA to the Royal Commission. Have you seen this document before?
Certainly saw the 29th of January one.
Round two, I think.
Yeah,
Mr. Van
I've
Horen, this is the
seen
second one.
subsets of it. I haven't seen the whole document.
And if I could take you to paragraph 56. Now, I don't put this by way of a criticism, but is it the position that what is summarised there, that is the bank remediating 9,106 customers, is actually the correct figure, and $2.5 million? Is that why you referred to that, Mr. Van Horen?
I think there are two categories, and I think my witness statement is the one I would refer to, which talks about the two categories I mentioned earlier to the Commissioner, which is that there were a number of customers whose accounts were approved when they shouldn't have been, and there were another number where they were approved at higher limits than they
Yes.
should have been. We had different categories, and if you look at my statement in paragraph 28, it refers to the different categories into which customers fell. The total final number of remediation provided was the $2.5 million number, and
Thank you.
10,000 odd customers.
And the remediation was finalised then in October 2016?
Yes.
So in total, it took about 12 months or just over 12 months from when you first discovered the issue to the actual payment of the remediation, is that right?
And if you look at all the documentation that went back and forth between us and ASIC, you would see there was a very, very detailed engagement around, for example, the wording of the letters that we sent to customers. There was also a fair bit of complexity in determining which bucket or category the customers fell into based on what had happened to their account in the intervening period. So that did take some time.
That's settling the categories or allocating between them?
Yeah, correct. Settling which categories applied and what to do. And, there were some complicated cases where, for example, customers were in hardship, and in some cases those debts get sold to third parties, and therefore how to deal with those. So it wasn't a simple, you've got 10,000 customers on the books today. We had to then understand what their status was and calculate what was the appropriate response for each.
Perhaps, Commissioner, if I can tender that page of the CBA response. I should say the paragraph, actually, I think that's...
Paragraph 56 of CBA response dated 13 February 18, RCD 0001 0003 0075 will be Exhibit 120.
That's it. Eloise, is there anything else? Thank you, Mr. Van Horen. Nothing further, Commissioner.
Thank you. Does any party other than CBA seek leave to cross-examine Mr. Van Horen on these issues? Mr. Sherry.
Just a couple of questions, Commissioner. Mr. Van Horen, Mr. Denali's asked you questions about the error, and it's been variously described as a system error and a programming error. Just for the record, could you say in plain English what the error was?
I believe it was a programming error where we intended for the flow of data between different systems in our credit assessment process to flow in that designed way, and the programming errors meant that the data did not flow the way it was intended to do, and therefore the incorrect fields were used in the final credit decision.
And what is meant precisely by a programming error?
What that means is the way you have to bring together all the components of that credit decisioning system, there are multiple systems and linking pieces of infrastructure, and you have to write code. Somebody has to write code with the suitable skills to make sure that the data flows correctly from each component of those systems to the other. And so the programming error was one where the coding was incorrect and caused that data to flow through incorrectly.
Did you ever find out how many lines of code were incorrect?
I didn't.
And the code is written by a human being rather than a machine?
It's written by a human being, yes.
And it was corrected by a human being
Yes,
when it was discovered?
yes.
And do you accept the proposition that the fact that the error occurred showed that the bank didn't care about the accuracy and reliability of its systems?
Absolutely not. I think, we completely care about the accuracy and reliability of our systems and put in significant effort to get that right. We don't always, but it absolutely does not indicate that we do not care.
How many transactions, speaking in perhaps billions or trillions, would the data management systems process in a month, say?
You might need to confine the question a bit. Are we talking whole of bank, whole of group?
Whole of the retail business unit.
Oh, yes.
It's a very, very large number. We've got close to 10 million customers who have, on average, 3 products each. So typically a transaction account, a day-to-day bank account, and credit cards and home loans and the like. Many, many billions of transactions every month. Many, many billions.
Can you give a guarantee that there'll never be an error in any of those transactions?
I wish I could. We do our best to minimise those errors, but clearly it's impossible to have a cast iron
I'm
guarantee.
very alarmed if you'd been prepared to give a guarantee, Mr. Van Horen. Very alarmed.
I'm glad I got the right answer to the question, Commissioner. Thank you, Commissioner.
Yes. Yes, Mr. Donnelly.
Thank you. That concludes the...
You done with Mr. Van Horen?
Yes, I don't have
I think we're going to see
further.
you again, are we not, Mr. Van Horen?
Yes.
Yes, you may step down. Thank you.
Thank you. Commissioner, would it be convenient to you for there to be a short break whilst Mr. Sherry leaves us?
We're about to change parties
That's right.
again, are we? It's coming up 12:10. If I come back at 12:15.
Thank you, Commissioner. Thank you.